Check 1, 2. Why is live chat? Check 1, 2. Check, check, check. Turn that off. Check 1, 2, mic check. On Friday. Switch that over to multi-stream. Good morning out there. How's everybody doing? I got some work here I got to do in the background. On Friday, I deleted some stuff for part of the show. We got to chat really quick about. We got a bunch of stuff to go over this morning. Welcome back. Happy Monday. It was kind of funny over the weekend again. We were hanging out in the Discord late night about the stock market crashing, and some of us were comedic, and others of us were, scared shitless, of course.
The US S&P manufacturing PMI.
Or they were
disconnected.
Or they're looking for a print, of course, one of those things, right? Now, there were some people in the Discord that knew that we wouldn't crash over the weekend, so we're going to go over that again today. We're going to just rehash where we are, why we're where we are, and what's expected, and how it is expected where we are to some extent. There's a little bit of variance. There always is some variance, but we're going to go back and just rewind all of this to when we took profit on 605. I think it was like 603.70, and then the 604.98. Of course, the price of SPY, if you look at it today, is not the same price because it's adjusted for the SPY X dividend that's paid out at the end of a quarter. I know some of you probably like, I can't follow all this, but some of you already know. You've been on the market a long time, you're following right along. So there's a reason why no one thinks we're crashing. And I've told you this. Multiple Opexes, and more importantly, this Opex and the last one. We're gonna go there right now and start talking about parts of that. Okay, so let's and I got some work I got to do down here, but let's see if we can look at. I think I hacked this up a little bit, so bear with me. I had some yellow boxes and stuff, but we're gonna go and look at this really quick. There's something really weird with my my microphone is all kind of wonked out. Hold on here. Check, 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 check. Maybe that's better. Check, is that better? I think that might be better. And I got a couple things. I think I'm getting sick. I'm not sure yet, but I think I might be getting sick. So let's start back here. We talk about this in the show all the time. And, just like hindsight trading, we have hindsight. Remember whatever the fuck I want to remember. I don't know if it's our group, but it's just the market in general. We have like hindsight trading, and then we have hindsight. I forget what's going on. Man, I hear a huge echo on my side. I don't know what is going on. Check 1, 2. Check. Maybe it's just my voice. I don't know. I'm getting like a metal sound. Anyways, we're going to go and look at, in particular, we're going to come over here and look at the 4-hour window. And I want you to remember that we're coming into, we got Jan 1 over here. Here's Jan 31st. And what's important about all of this is, first you have the exuberance on Trump winning, right? If you remember, if Kamala was going to win, we should have started a recession almost immediately. And with Trump winning, not so much. Trump, I know, shockingly, shocked Pikachu, the party of no spend is not the party of no spend. Not only that, but they came in at the beginning of this term here, and there's exuberance, right? And we're under the impression on the baseline that we're getting Trump tariff 2.0, but that a lot of that 2.0 tariff that's big, like, hey, we're going to change the entire economy, likely doesn't begin until the second 2 years of his presidency. Check my connections here. And we get, as we come up in here, we get taking profit on the Trump trade. And there's a whole basket of it, right? This is a basket that's been running all summer long. GS basket, mind you, it's been running all summer long. But then we get more like, hey, you know, in this month right here, we get more, hey, it's going to be worse than you thought early. And right around there. So you get the front end. You get, hey, party time, right? And you get another bid for this month, knowing that we're coming into seasonal weakness. Somewhere over here, either end of February, end of March, somewhere over there, we're going to get some seasonal weakness. And then you get the ramping of you know, doom tariffs, right? Doom this, doom that, doom this. So we come out of the front end of the first month of the new quarter, and we go down, right? We go down on this uncertainty, uncertain policy, and through this whole thing, we get punitive damages. We're kind of expecting a major correction, but that's like 15%, like somewhere down there. And we went down for an extra 5, didn't we? Now, it's not a crash because it wasn't fast, but it was the second half of Q1, and in particular, the first month of Q2. And we weren't able to make any kind of significant breakout from this downtrend. We weren't able to make it here, right? And I want to show you like these, that there's these moments in here. Yep, I don't want that. I want this right here. Right? So you got March 28th, right? No way to escape. There's no like, hey, we're breaking out before the end of the Opex period. And even when you get your known downside, there's no breakout here either, right? And you're confirming that the way is still lower and the market cannot unwind. Cannot unwind. Okay, so now we're heading into April over here, right? And you'll see the same thing right here, right? Hold on here. I don't know what's going on. Same thing right here, right? Now we slam down into this, bottom over here. We begin to make our way. We get price early, right? So we're still in this like downtrend. Right? We get our price early in the month. So we hit our target early month, right? This is the 9th. This is like a window here to take profit on your monthly trade. It's like the 8th to the 16th or so, somewhere in here. So we fucked around over here and slammed down here. Hey, you got profit, you get out. And then you start hedging. Now, in this case, we're in a downtrend, so your hedging is to the upside, not the downside. Okay? Think about that. And then think about this downtrend that's going on. We begin to break out, though, as we hit the end of the month. All right, we hit an Opex, and just like any other period, right, we're heading into this end of month over here. And what do we see? We're looking for certain things, aren't we? We're looking for the ability to possibly unwind this downtrend, and we're starting to actually see it. And from there, it's history, right? Unwind the entire move. So when you're looking on this side of things, and every one of these are in this big trend to the upside, you can have moments of down, right? And you can also have moments over here of down. But it doesn't necessarily mean that you're not, out yet. You see, this is the window of volatility up here, right? That's a window of movement, but not necessarily the end of the world. And there are reasons why we get tied into these Opex periods. So our target was 605. We got it early, right? And we know that we're going to head into this like window where we can roll down once we exit it. We also know that there's opportunity for downside moves or even upside moves in Vixpiration, in Opex, and in particular month end. And these are these windows where the market can go higher, go lower, and normally within this time period, there are some highs in here. We haven't seen any of those, right? We haven't seen any of those highs, have we? But what we have seen is that we've held up. These are the inflection points you want to be looking at, right? Hedge on highs. Watch the inflection points on lows. Right? Are we holding or not? And if not, where are we going? And what you're watching right now inside the market is multifaceted. You're watching futures. You're watching like futures get nice and low, right? Futures dips and dips, right? Weekends, we're getting nice and low. CFDs, right? So you get like a CFD low over a weekend, and it's bought back up with CFDs, right? Maybe even some dark pool. But we're not crashing in here, are we? And the only thing I could say that's a little bit different than usual is we're not getting any major highs in futures or on the weekends, nor in cash market. Now, how is this being expressed? Futures is trading very nicely. Weekend low buying on CFDs is outstanding. Intraday zero-date puts are working if the newswire picks up on World War III, Iran, Israel. And hedges are working out pretty well from back here. If you took them, right, that's pretty good. A nice little downside move in here, downside move in here. But we haven't lost anything either. So let's take a look at a couple things here. One would be, I read to you a brief from Volatility Wiz, where he discussed a week or two ago the same thing that I've discussed with you, which is when we're in these Opex or Quapex periods, it's more of a hedge or take profit, hedge highs, and monitor what's going on down below. Now, in this particular Opex is quarterly Opex, where we get the JPM quarterly hedge roll, and a bunch of other people roll their options. So we're closing options over here in Opex, right? Or some people are. We're closing parts of their options. And they also close some options on the end of month. And they also close options the first week of the first month, too. Like, hey, I'm looking for a crash here, but I'm going to date it 1 week after the month. That's frequent. Matter of fact, if you're hedging this summer, when we are known to come into some seasonal weakness, trading or having your hedges print the week after each month, like the first week of September, the first week of October, First week after August is always a good thought or a good idea because of what happens in Opex and quarterly Opex. Also, though, we roll this big position, but they also roll their hedges monthly too thereafter. Smaller hedges. Smaller, they're not really hedges. They're meant to rein in volatility so that we don't trade like we're in Zimbabwe. And there's people that mirror those trades or use their own type of hedging in the markets. So on the end of the month, this is where the roll happens. So why are we not going down over here? It's because of the option market being so wound up, because of the JPM collar. It's because of people in spreads. It's because of this giant fucking machine that nobody is 100% sure about. So if you're not 100% sure about it, you look for the behaviors that take place in this time period and try to find an average of what to look for. And it's usually stuff like this, you know, down, up, down, up, down, up, down, up. Fade if we're on the upswing, or if we haven't hit our target. Let's say we didn't hit let's say our target was above here and we hadn't hit it yet. If our target was 610, we would expect to hit 610 at some point, but our target was 605 from a low down here. Also noteworthy is inside of these weekends, we're trading down to the lows. It's when the markets actually close, not Sunday, but like Friday, Saturday, early Sunday. We're trading down into the June 2nd lows over here. It's like way down here. This doesn't even show up in a chart. It's like a weekend chart. So they're buying when you're not seeing on the weekends too. Right? So there's who? Dark money. Dark pools. Friday, don't have to report it till Tuesday, right? You have to report dark pools all week long, but not on a weekend. You get like an extra day of reporting what you actually bought for. So in this CFD environment, they are buying the market underneath right now, aren't they? We're not losing this, are we? What would it take for us to lose this? Probably like actual World War III, where we lost something. Terrorist attack, right? Blows up something, all of LA or something. It'd have to be something major, something unknown, something unseen, something that triggers not only hedging, but real money selling. And I just told you what's happening. People are doing what? They're pushing hedges out to July 18th to cover the war. They're buying intraday zero-day puts in cash markets. They're trading futures. They're taking us down with CFDs in the weekends and not fucking with the rest of their trade, right? And cash market. So they're also what? Longing the dollar. They're longing oil. So all that doom shit is being expressed elsewhere and not in an option trader that wants to see cash market down here. Make sense? Everywhere but there. And not only that, even if you were going to monetize any of this hedging in here, some of it will get picked up and you can get paid. But if you're looking for like the doom trade, it probably isn't until after we exit the fucking window in cash market. Exit the fucking window of movement. Make sense? So there isn't really a lot to do here in general. What you're doing is you're watching the inflection points. You're looking for highs to sell. Either, or in my view, the best ones are out to, August, September, October. So you can catch some kind of like doom after the window of weakness, or if you don't catch it, you get it on this side over here. Make sense? As a matter of fact, if it hits early, you can hit 60, probably 64. If it doesn't hit early and we continue higher, 90 is the target. So you have to like have a hedge if you're going to do one that's only to 90 and you can make money down to 60. Or you have to do two different hedges, one for the doom and one for the August, September. A couple different ways to express it, right? I want 60. I'm going to date it for Opex or thereafter, August 31st or whatever, 30th or the first week of September to capture like way down to 60 or something like that. So it's complicated, right? It's complicated. And there's not a lot of winning in here for a lot of traders either, even though you tell them this is going to happen in advance. And now we're trading higher now, right? As a matter of fact, there was a low on Qs this morning that probably got you paid on that Qs debit put spread off the bell this morning. And now we're heading higher in the market. So the key takeaway here is, or there's some more key takeaways here. We're getting into the last 2 weeks. So we've got, we're about halfway through the process now. We have another half of this process left. And you see that the market is holding throughout this entire process. So what you do is you begin at this point to shift to, hey, I need to start looking for a low in the market. Some kind of low if we can't break down, right? And if I wasn't giving the chance to hedge, maybe I'll be afforded one thereafter. Okay, so you're still looking for the inflection points, and you're still looking for highs. I don't know if it comes here, but a high to hedge. And if we don't get one, right, it's just down or something like this, and then we catch the chance to put hedge on, we can take it up here. We can take it at 610, 620, doesn't matter. Just be watching and observing as we head into this end of month. Not only that, we're coming into some key economic news, right? Some key economic calendar stuff. We've got existing home sales today at 10 a.m. We've got, let's make sure I got this right. Oh, nope, excuse me, I got this wrong. I'm tighter. We've got, give me one quick second here. I'm all jacked up. As soon as I reset this, okay. What's going on here? There we go. We got existing home sales at 10 a.m. We got Chair Powell testimony, or federal testimony from Jerome Powell on Tuesday at 10 a.m. And then we get, do I have this right? Yeah. More testimony from Jerome Powell at Wednesday at 10 a.m. And then on Thursday, we get GDP growth, durable good orders at 8:30 in the morning. And then on Friday, we get the big boys. We get PCE, personal income. That's the 27th. And I, in particular, think that that's going to be a hot reading. There's a very high chance of that happening. The next thing that happens is on Tuesday, the 1st, we get ISM manufacturing PMI and JOLTS. And then on Thursday, the 3rd, heading into the long week, we get non-farm payroll and the unemployment rate. So just looking at this week right here, now there's a lot going on, isn't there? In this window where we exit the month, if you wanted a reason to go down, even if we get sucked up back up here, that week of like NFP on Thursday the 3rd, and on Monday or Tuesday the 1st, offers some window of downside over here. But as a matter of fact, as we head back into, I think tight here. Yeah, we got PCE. PCE's on the 27th. So if you had a little bit of a shock down in here, right? You get a little bit of doom upside with gamma on the contract roll, and you're not making any more highs over here, and then you can start to maybe unravel even a little bit to maybe catch that low that you've been looking for. That's below 90, but it could be a wick. So you get the big bar right here, you get the wick down below, and we're in and out of here. So all in all, everything looking pretty good, right? All in all, pretty good. More window of weakness over here. And then some movements possibly to the upside, or we start blasting down and price in all that Israel, Iran hedging that took place in this time period. Okay. Let's take a look at where we are with SPY. Down, up, down, up, down, up. Looking for another down move coming up. 10:07 right now. We're going to see if these sellers come in at 10 or 10:30 this morning. There's 10. Also remember that 600 is the wall. Let's take a look at SPX really quick here. And we're just over 6,000 right now. One quick second here, guys. 5905, 6,000. It's actually not as big of a wall as it once was. So here's the middle. Stuck in the middle with you. Do, 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 do. We're in the middle. Is that 6-0? Hold on here, guys. God damn it. Sorry about that. So there we are. This is a magnet, right? This is 6,000 right here. That's 6,000. We keep getting sucked down here in weekend overnights in particular. Buy, right? And we're swinging back up into this zone right here. It is good to see some of this being built out over here, but I don't expect those calls to be rolled unless we're at or near 610. You'd want to see price up here and see these calls be monetized or triggering the FOMO. To round out these calls, right? We can sweep back down and then try to take those bad boys out. Hopefully 630, 25 is the biggest one. You need people believing that we can go higher. But for right now, not there, right? So 6,000 is the key right here. Your next key target is 6050. This is the largest bar. So we're going to say no to 6,100. Got another bar at 6075, and then of course you've got the 5905 and 5880 down below. So let's go look at this right now for where we are. Hold on. Hold on a second. We got 5905. Make that green. And you got one more bar at 58.80 for a wick. So if you're thinking about this QOPEX, quarterly Opex, right? Yeah, maybe we can get down here for a little bit. Whoop. It's already being bought, by the way. On weekends, likely from dark pools, but hope we can get a little bit down in here, right? Put like a first. Here's the first, right? June 30th. I'll put this one over here. It was a window, right? Maybe a window of opportunity down here, right? If it's possible, get on down here. Whoop. Up and out of here. 595 would be a beautiful thing, wouldn't it? I don't know if they'll give that to you as a cash market trader, but I'm hoping we can get down there and get at it. Next thing you want to be looking at is the upside, which is this 6050. Here's, we'll make that one yellow. And then we've got the red at 60075, theoretically. We'll put it in as 6075. That's the shoot you shall not pass for right now. Need some good news, don't we? This is also why we don't typically break out above before we get into the end of this cycle, or even down. You need like good, really good, or really, really bad news. Otherwise, we get locked into the end of this cycle. Look at something else here. This is our Opex, right? This is on SPX, but what are we doing? Womb no, womb no, womb no, womb no, right? Even over the weekend, right? Shall not pass. You 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 shall not pass. There's some, weekend shit and futures shit, but you shall not pass. Now, as we get closer to the roll, right? We're no longer hedging, or the gamma's weak on this stuff. There's potential, right? There's potential to break down and below and out of here. So we're going to watch that closely, aren't we? This is 58.80. JPM short collar puts 58.80. We've got a gamma bar at 5,900. Right? Somewhere in here. And there ain't shit happening, is there? Nothing, 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 nothing. Now, you do expect some highs in these cycles. We haven't been able to get one. But it's likely a product of Israel, Iran, like the reason why we haven't shown a new high. So in this topping process here. Hold on here. Where's that Weeble chart? At any rate, in this topping process back here from June 11th, we haven't really seen too many highs. We saw this high, but there should be like maybe another spike up here. We haven't seen that at all. Usually it's like a nice rounding effect We're going down, down, bam, down, 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 bam. You can kind of see it more pronounced. We're not seeing it right now. More than likely has to do with Iran, Israel, and any opportunity to hedge. I'm assuming that on any high on this downward move, on any high in this downward move, there's big hedges coming in. Now, can we trade up here? Yes, we can. Even in cash market today, it's possible we could get up here. We could even trade up here, and I'm more afraid if we trade up here. I don't want to see that this early that we go up there. At this point in the process, I would have been fine if there was one more there and one more there, and then the downside move. I don't like the idea of going up here for liquidity this late stage. 2 weeks left. I think that it's to price in an ugly move after the quarter. So we'll monitor it closely. We're not there at the moment. And not only that, we have this last leg right here. I was looking at this on Friday with you. And, you know, this triangle's holding, isn't it? So far, this is holding. So it's hard to, like, call which wave this is, if it even is a wave. I put in a brief this morning, and then I lost this brief I had this morning. And I'll tell you what, if you're a seller, you have not yet satisfied what needs to be satisfied for a change in upside trend at this moment. It has not happened. It has not. It has not happened. And as this progresses the next 2 weeks, if you can't get us lower, we're going up. You know, if you start like looking for liquidity for this stuff, and then we're coming down into this stuff over here, into either the 30th, the 7th, or the 3rd, and you can't, in the, like these last, like, you know, expiration, Opex, month end, you can't get us low enough, we're going to start making highs and heading out of here. I couldn't see a proof Friday or even this weekend that the sellers are in control here. We're still on trend too. So you really want to start seeing a break of all that stuff. You really, really, really do. Now we're sitting on 1030 here. Sellers unable to sell. They'll take one more shot at 1030. If they don't, we'll go higher. Can't see anything or hear anything? Fuck is going on? Hold on a second here. How about YouTube? Okay. Try to reset your, maybe somebody can put it in the chat somewhere. That might work for you. So all in all, I think the key takeaway here is that if you're like top line this, right? we talk about this every Opex and QUAPEX. We talk about, the fade heading into Opex and a month end. And then we talk about like watching inflection points to get long or short if we change direction. Look at seasonality. Look at like seasonality is important. Where are the major participants at? And then and really truly within that range, that like Opex, it's the same as the pre-Opex range. There's like, I want you to think about like, in each range, right? I want you to like somewhat the market is predetermined. Like, if you know you're in this bottom range to get a high print, right? Does it matter if I catch the high print early? No. But I'm in a range. And then there's another range. There's like a range, another range, there's another range, and then there's going to be another range. We don't know if it's up or down. But every time we enter these ranges, you get like the wrong people souring what you're saying. So, like, can we, like, an example would be, let's say we had a high target here, which we did, right? High target of 605, right? Let's say we catch that high target early. Sweet, I'm out. I took my money, I'm out of here. And then we go back in a range again, right? So, I want you to think about that, like, when we're in the middle of a month. I want you to think about the beginning of the month. I want you to think about the expiry part of the month. If we're heading up in an uptrend, you're likely going to fade, that Opex period. And, that's what we're doing again, right? So, do we know if we're going to crash? Of course not. Do we know if we're going to go up? Of course not. And in both of these periods, in both of these periods, there's a lot of the market that's offsides. A whole bunch. When we're in either of these periods, there are option sellers that are selling suckers, calls, and puts. Now you can make money as an option seller if you live within that range. You can make money if you can, open some kind of a spread or 0-day calls if they're cheap or 0-day puts if they're cheap, and live within that range. You're going to be way better off than the majority of the market. We've been talking about this now for the year. We've been talking about this for the year. When we came in on February 14th and I said to you, start hedging, there's a reason why I'm telling you that. And we've been building upon this story now for the whole year. So when people are out there like with their hairs on fire and your hair is not on fire, you should be looking at the people that don't have their hair on fire because they understand these cycles. And you gotta at some point have to live within these cycles. You'll get annihilated. And especially when you're pre-calling it. Okay, we're going to crash early. Fuck that guy. We're not, are we? So, unless it's an unknown, but you can't trade unknown unknowns. There is nothing you can do about that. There really isn't. You can't be walking around saying, I've been waiting for the last COVID roll. I'm going to get rich again and then give it all back. That's absurd. You probably called it like 100 times between now and then. You just can't. Don't trade like that. Don't listen to those people with their hair on fire. You got to like know that we're like wound up. Like we're literally wound. And there are moments where we can go down or up. Like there are moments in expiration, but they come right back. How many times have I told you if we do a DivX or a expiration or an Opex, we tend to revert, right? You'll see like really bullish at a certain time of the day, like 1:30, and then they roll us down to like 3:30, and then it's all like it never happened again, end of day. Same thing with DivX, right? Same thing with Opex. The real unwind typically doesn't come until month end. In this month in particular of this quarter, it doesn't fall on like a Thursday or a Wednesday. It falls on a Monday, which is even worse. The date does matter. And the week ahead matters too. And in this case, we got a lot of shit, right? We got NFP, we got PCE the week before, we got Fed meeting this week, we've got a day off, we got like, I think Thursday we close at like 1 or something. Then we got 4th of July on Friday. So you got like a lot of stuff going on in this time period. That rather than like getting cut up, you just sit on the outside. It's the summer trade. No matter how it unfolds, the calmer you are on highs, like I want to sell this, and the calmer you are on lows, I know that this is going to hold until we get to probably, a day or two maybe before some kind of news. And then if I get some kind of bloodbath, I know what makes me comfortable is what? 90, 84, 85, 86 on a wick. Bunch of people running around with the hair on fire saying we're going to crash. And I'm just adding to my position. I'm hedged. I'm adding to a position while everybody's going fucking bananas. And that was this weekend, right? Everybody was going fucking bananas this weekend. Market was down like 400 points, 500 points. I'm like, oh, please just print the QQQs. Put back spread. That's it. I'm like, if we're down 500, I bet we can be down maybe $1 or $2 on Monday open for like a minute or two. For that much down, I didn't think we'd open 500 points down on Monday, but I figured it'd be down to where the put spread would print. So think about what I said to you earlier. How are we expressing hedging this doom? And I told you, we're doing it in futures. We're doing it in 0-day puts in the cash market. If any doom comes up in cash market, we're doing it with not the hedges for late summer. We're doing it for like UUP calls for July 18th, right? So people are expressing that trade elsewhere. They're longing oil. They're longing the dollar. They're not selling. There's no real money selling of the indexes yet, is there? And not only that, we already know that Mag 7 keeps cranking, right? So, at this point, when you're seeing people with their hair on fire, try to pull them to the side. I try to do that with people like, hey, man, are you okay over there? What makes you think that we're going to crash? And their answer is 99% of the time, it's just some asshole on FinTwit telling them it's going to happen. It's some guy with fucking 500,000 followers on YouTube making a fucking YouTube thumbnail with a crash on it. Million followers or something insane like that. And they're like, that guy knows what he's talking about. Or it's Wall Street Journal or the New York Times or the third or fifth wave of regurgitated crap from FinTwit or Twitter. Stay away from all that shit. We prove it. We've been proving it to you again and again and again and again and again the past 2 weeks, haven't we? I don't know. Do you just keep yelling it for the next 2 weeks and then you're right on the first week of July, I guess? I don't know. So you just scream bloody murder every day? For a low in the morning or a low at nighttime or something? I don't know. It's bad form. People do it on FinTwit all weekend. All right. So we're looking for buyers or sellers here, 10 a.m., 10:30. They're taking a shot here, taking another shot there. Trying to roll us to the downside right now. We got a bunch of stuff to go over here. I went over and talked to you about the Senate hearing that we've got coming up. We've got Jay Powell speaking twice this week. We've got, let's rehash again. Oh, by the way, the reason I'm doing all this right now is because something is going on with me So I have a cloud server, and then I've got a website and stuff, and we have different functions that take place at different times of the day. And twice now, I've written briefs, big ones, like big briefs that take me hours to do, and they got erased while I was making the brief twice. And this is a major wrench in my day. To do that a second time is like another 3 or 4 hours. And maybe not 4, but it's like 3. That's like an 8-hour project. And I haven't even streamed yet the day. So we are working on looking at functions that are taking place at certain times of the day to see what's going on. So I apologize to you. This morning I could not write a more in-depth brief, but it was something like this. It was in a nutshell, this kind of stuff. Okay. What else I've got for you? Let's read a couple things here. The market's reaction to U.S. strikes on Iran is very contained so far. No shit, Sherlock, as it will remain. Dollar's been doing well. Oil's been doing well. Polymarket implied odds that Iran will close the Strait of Hormuz are running at 31% this morning, down from 51% on Sunday. Let's talk about the Strait of Hormuz. Where we are right now, there's a couple of things I want to talk to you about here. Something that's just, aside from the stock market. I do want to comment on this, us entering the war with Israel. If you are a Westerner and you're watching this show, do yourself a solid and stay away from large gatherings over the next few weeks or until there's some sort of resolution. I got to say that to you as an American, that you should stay away. If there's like large gatherings, don't be there. It's the same thing as a contested election or something, or like when an election is contested and we're getting into the heat of it, and people do stupid shit, right? The DNC convention, RNC convention, a highly contested election. You don't want to be there. Speaking engagements. Saw one with Trump this year where someone tried to go after him. Better to not be there. Something like this, be prudent to stay away from large, target-rich environments. No matter what it is you're doing. I don't care what you're doing. I don't care. Like any large civilian thing, just stay the fuck away. You don't need to be there this year. And especially because this is Iran. I'm going to tell you something. I like Iran. I like the Iranian people. But Iran is a Shiite country, and they fund, behind closed doors, and have been for decades, most terrorism that's been going on since I was born. Okay? So when I was a kid, there were hijackings on airlines, and they were usually funded by Iran. Now, I'm not going to get into the politics of Iran good, Iran bad, or any of that kind of stuff. Just as an American, not even American, just a Westerner, just be safe out there the next few weeks. Now, we know about the Strait of Hormuz. That can impact our markets. It does not look like our government is in any posture right now like it was, let's say, a month ago or 2 months ago, where the Houthis were taking pot shots, from the outfield, ping, and almost like the Sand People in Star Wars, right? Shooting from like a mile away, boom, got them. Let's go down there and fuck with them. Which you'd expect, right? Now we're in a situation where the U.S. is committed. There are lots of warships, aircraft carriers, men, women, assets in the area now. So do I think that the Strait of Hormuz will close? No. And not only that, like the Operation Praying Mantis that we had before, I would think if the U.S. saw mining of the strait or a fart it's going to be like resume carpet bombing, make glass parking lots everywhere on the coast. So I don't see the Strait closing as too much of a risk. You know, where it's like, you know, the market's going to go to zero or something. At this point, I don't see that. Could there be a closure of the Strait of Hormuz? Briefly, possibly. But I would think that our country is monitoring even laying of mines in the Strait of Hormuz. I would assume they're under the microscope at this point. And the last time a country was under the microscope over there, like, and I don't mean like a few weeks ago or whatever, taking pot shots. I mean like the last time, like Operation Praying Mantis, we literally destroyed everybody's navy, or Iran in particular. We had to actually call it off. It was like just a little too much. So I would not be fucking around if I were them. Maybe they don't care. That's fine. So I don't see that strait being closed for any major period of time. Maybe a day, maybe 3 days. I would expect the fucking hammer of freedom to come down on, you know, whether you agree to hate that hammer of freedom or whatever. I would expect a fucking hammer to come down on the Strait of Hormuz if anything like that happened. There is also a debate of how successful the U.S. bombing campaign was, and interestingly, the odds for an Iranian nuke in 2025, 16%, are rising again after an initial post-strike drop, as the enriched uranium has gone dark and has moved to an unknown location without the IAEA able to track it. Jeffrey strategist Mohir Kumar doesn't see a closure of the Hormuz Strait, but sees the possibility of disruption. I'm with him. Our base case would be a period of uncertainty lasting a few weeks, but without a sharp escalation, he said. And I agree. Under the microscope time, you can't fuck around. Now, the moment the U.S. moves all the ships out of the way and out of the microscope, and you want to see the Strait of Hormuz shut down, I think that's possible. I think right now, fuck no, that ain't happening. I pity the person that's tasked with doing that right now, because you know what it is, right? Wham, hammer there, wham, hammer there. Goldman's Pravorsky is saying in a note this morning that he expects selling into quarter end. Shocker, we know that already. We knew that every fucking Opex in this trend up. We're in an uptrend into Opex. We know there's going to be selling in a month end. Thanks, Pravorsky. And he also notes that gamma support has faded. According to GS model, implied SPX daily gamma is running at minus 180 million currently, with the gamma flip estimated at 59.75. Now, what he's not telling you is that, hold on a second here. What he's not telling you is that this isn't really negative gamma here. What I want you to know is that gamma is a funny thing. There's, you know, positive, there's positive gamma, right? There's negative gamma or neutral. Coming down here, it's more like neutral gamma. And then down here is where you get negative gamma. It's not just like one thing. There's different levels of gamma. You might know that, right? So are we really negative here? No. If we're underneath positive gamma, we can have some movements, but it's not really negative. And not only that, we're in a function right now of quarterly Opex. So when you're in this function of quarterly Opex, all the numbers are kind of wonky. As a matter of fact, if you're in positive gamma and you're like have a down day, the overnights can get really finicky with slight price adjustments. Same thing with big up days, and especially as all of this data is changing rapidly as we approach quarter end. So to think that, you know, like it's all doom and gloom, I wouldn't be thinking that. We are definitely locked into an options market landscape that rapidly is changing, and nobody can really call. And so what you do is you're looking for what normally happens. And so far, this has been respected. You can leave the top and bottom calling to the furrows or whatever. It's far easier to just watch what happens in these cycles because they're 99% of the time they're the same. Literally, they're the same, or they have behaviors in line with expectations every quarter and every month. And as a matter of fact, as of that note from Bravorsky was from this morning. And where is the market trading right now? Market's trading a high of 59.35 currently on the Monday of the new week. Okay, what else do we have here? Let me check something else here. Think tighter, guys. Anybody getting short in here? Yeah, it looks like two failures right there. Maybe one more high into tomorrow, maybe we can sell the rest of the week. Take a look at the velocity really quick. Well, that Velo's looking strong right now. Velo's looking kind of sexy. Oh, looks like it wants to fuck. Maybe we do get one of our highs to hedge. If we get a high at like 6075, I'd be stoked right now. I do not have a fall hedge on right now. Like, I need a hedge. Excuse me. What else do I have for you guys being Monday morning? Well, we got GS popping off all weekend. GS, we estimate a 10 to 15. Oh no, that's oil. That's oil stuff. Hold on. GS is crook. The third scenario is the response by Iran is to attack assets in the region, either military assets of the U.S. or oil assets of the neighboring Gulf states. I think at this point we expect material losses of supply. Shipping will refuse probably to go through the straits. I think the strait will only ships that go are the sovereign-owned ships of the Gulf states. I would imagine that independent shipping refuses to go in the region in the same way that they curtailed their activity in the Red Sea when the Houthis first started attacking. So I think at this point we are definitely heading to $100 oil. Last scenario is if Iran acts to shut the Straits of Hormuz through mines, attack threats, actual attacks. At this point, we are potentially affecting 15 to 17 million barrels a day. This is obviously not a situation that the oil market can cope with, so we are going to trade north of $100 between 120 and 150, similar to the price behavior when Russia first invaded Ukraine. This is certainly not out of reach, not an unreasonable expectation. Our view is equities could trade 200 to 300 points lower on a gap move to $100 in oil, led lower by AI, given that's where we see positioning as most concentrated at the moment. We still believe that the near-term downside floor is 5,700 on SPX, which is roughly the areas we were at before the first China deal. That's the 56 564 that I saw on SPY last week. I posted about it on Twitter. It is flashing. It's not flashing as of today. It was flashing last week. We just wait for a high to hedge. Don't be buying fucking bottoms to hedge that trade. Go on there. In line with the Opex cycle. SPX 5075. Let me just see some of this here. The U.S. sees high risk of Iranian retaliation, which could occur within days, according to Economic Times. Quote, the U.S. assessed a high risk of imminent Iranian retaliation against its forces, which could come as soon as the next day or two. That was this morning at 9:30 a.m. The U.S. assessed a high risk of imminent Iranian retaliation against its forces, which could come as soon as the next day or two, but remains committed to pursuing a diplomatic resolution. Reported Reuters citing two officials. Global Services PMI June 531 versus 529, expected 53.7. Lower than expected, but not bad. Global Manufacturing PMI 52 versus 51.1 expected. 52.0 prior. They're both in line, and if anything, manufacturing looks good, which is what we want. We want manufacturing taking over from services with the economy change. Actually looks pretty good. Existing home sales, 4.303 million versus 3.96 million expected, and 4.00 million prior. This is, of course, in the face of all the fucking doomers watching some markets going down across the U.S., remember that normally that process of rolling the housing market takes years. It does not matter until it does. And not only that, the numbers are good right now. Even when we do that roll, I don't expect any kind of 2008 type of scenario. Most homeowners today have purchased with cash or have owned their homes for many, many years, if not decades. The only people whining right now are people, it's a very small group. It's like the tiniest group. And even people that have rolled up from their prior homes have equity built in that they put into this higher price in their homes from another house that they owned. So you're talking about a very small group of people that are at risk right now in the housing market. Housing numbers looking good overall. Fed member Bowman, as we think about the path forward, it is time to consider adjusting the policy rate. As inflation has declined or come in below expectations over the past few months, we have more Fed chairs ring the bell to cut. It is time to consider adjusting the policy rate as inflation has declined or come in below expectations over the past few months. We should recognize that inflation appears to be on a sustained path towards 2% and that there will likely be only minimal impacts on overall core PCE inflation from changes to trade policy. I'm going to warn you right now. I want you to mark this down, okay? We're going to write this down somewhere at home. You are going to catch hot PCE, and there is nothing you can do about it. I guarantee it. You're likely going to catch one or two. You're also likely going to absorb, and that means you're going to see hot inflation through this summer. And the reason you're going to absorb it is because you're well off. You're still not well off. Now, there should come a time, either end of year or next year, if we don't get wage price or we don't get wage growth with price spiral, you could see inflation come down, believe it or not, because you will eventually say, fuck you, I'm not paying these prices. You're just not at that moment yet. So even though these Fed chairs are talking about cutting right now, in my view, they should wait. They should wait until the next like 2 or 3 PCAs come in. You'll see inflation run hot, and then they would start to cut. Now, I don't know what this talk is all about. I don't know if it's to pump the market heading into this next Jerome Powell thing, or if Jerome's going to do an emergency cut for you right now. But it's mixing words at this point when those cuts come. If is it early or is it later? I prefer it later, just so that if we get those hot reads and the market's bleeding, you can get a cut or two, and it'll help support the markets on these knee-jerk reactions as you catch hot prints. And I'm warning you right now. I'm going to warn you that you're going to catch some hot prints. It's almost a guarantee in the next 2, and specifically PCE in particular, should show up as pretty fucking hot within the next 2 readings. And I think it's just the right time to do it would be like on that hot PCE reading. You come out and you drop 25 basis points. You get another hot read and you drop another 25 basis points. I think front running it is abnormal for how our system runs. And I don't like it. That's what I mean by that. I don't like that it's like pre-cutting for when that happens. I think it's always better to see like, hey, we got a hot print, the market knee jerks down, you get a cut, market back to where it was again. A situation normal. Start cutting right now, and then you get a couple hot prints, you're still going to get a knee jerk down. And you don't know if it's worked or if it's worked the psychology of traders and investors. I always like the trader psychology and the sentiment to be like, oh God, we got a hot print, even though it doesn't matter. So it's a blip on a chart that takes 3 to 6 months. But even in that knee-jerk reaction, I like the sentiment of participants being assuaged with the Fed doing something only when it's showing and needed. That's also possibly why you're getting a little bit of roll coming up here. A little bit of that 10:30, 10 o'clock roll happening right now. And so even though we have that talk right now for a cut, there's probably traders out there too that are interested in that cut. Do we get it early? Do we get it this week? Do we get an emergency cut? And I think that that topic of conversation probably comes up. You know, you always get like these senators and you get state reps and senators. They're always like one step behind. They're always asking stupid questions. Give me one quick second here. If you guys recall, there was a time during COVID where the Senate and the House of Representatives wanted Jerome Powell to open up loans to Main Street that they were opening up to large corporations, and the market like was bleeding on this news. And a lot of these hearings are used for placating your constituency. So you're probably going to see some talk about inflation. You're probably going to see talk about the war. Probably going to see talk about the housing market. Those things will be brought up. But I want you to remember that the function oftentimes, not every time, we do get hikes and cuts in these hearings sometimes, or we have. But I do want you to be aware that when you're hearing a lot of this talk inside of these hearings, that they're not based in any form of reality. I remember in COVID, a bunch of senators wanted these loans opened up to mom and pop and middle, like small business owners. And Jerome was like, this program really isn't built for those people. Why don't you give them a grant? And the Senate was like freaking out. They were like, what do you mean give them a grant? And he was like, I'm going to give, Bob on Main Street a loan, let's say, for $500,000, $250,000. And they're going to take that money, let that business, keep that business running until after COVID is done, we start tightening, and then they're going to automatically be in debt that they can't service. And so you're going to see a bunch of these companies go bankrupt. He's like, you're literally setting people up for failure. He's like, just give them a fucking bunch of money or give them a grant of some kind with no payback. And they were angry about that. And he made the right decision saying that too. And there was was it called PPI? No, I don't forget what it's called now. But there was some programs for small and medium business owners that they took advantage of. And did you notice recently, the past year or so, there have been some bankruptcies, right? Restaurants closing around you. Anyone with small profit margins, they were like, oh, they were doing fine through COVID, and now they're not. They were probably already going to close. Right? So you don't want to help companies that can make it through that time period, but then you don't want to artificially inflate companies that were already going to close no matter what once that money dries up, and destroy those people's future. Yeah, you know what I mean? So think about that when you hear these hearings this week, that you're going to see a lot of shit be spread that's not based in any kind of reality, is my point. PPP, that's what it's called, PPP. Thank you. You don't want to, watch out for the Senate hearings. So at any rate, Fed Chair Powell is scheduled to speak. Let's see if I get this right here. I got something to read to you guys. Ow. Let me think tight here. I'm going to read to you a piece from Bloomberg. Remember, this is Bloomberg. U.S. inflation probably inched higher in May, offering scant evidence of extensive tariff-related repercussions that the Federal Reserve expects to become more apparent later in the year. Ahead of the key figures on Friday, I'll post this inside the Discord for you. Ahead of the key figures on Friday and fresh off the Fed's decision this week to keep interest rates unchanged, Fed Chair Jerome Powell heads to Capitol Hill for 2 days of testimony, in which he'll lay out the case again for the central bank's go-slow policy approach. The Fed chair is likely to emphasize that while rate cuts are possible this year, officials want more clarity on the economic impact of White House trade policy. Economists see the personal consumption expenditures price index, excluding food and energy, the Fed's preferred gauge of the underlying inflation, rising 0.1% in May for the third month. That would mark the tamest 3-month stretch since the pandemic 5 years ago. U.S. central bankers largely see the Trump administration's expanded use of tariffs putting upward pressure on prices eventually. But their latest economic forecasts also show officials see weaker economic growth and higher unemployment this year. Now, saying that, I posted over the weekend something, a diatribe about like the SOM rule and the economic index, the economic projection index, what the fuck it's called. Those things have been wrong. Like wrong. The Fed could extend this market for years. They have done that in the past. You'll get people that cry and moan that are like, I want a recession every year and a half. They're not getting one. It's not how it happens. Matter of fact, you usually go into a soft landing after your last recession. And then there's a window in between the soft landing and the guaranteed recession that you get thereafter. And that time period is all over the place. There's no edge in when that actually takes place. The Fed Chair, Governor Chair Waller on Friday told CNBC that the inflation hit from import duties is likely to be short-lived, and he sees room to resume lowering borrowing costs as soon as the next month. The Fed's next policy decision will come on July 30th. Not only that, you've got Bowman this morning talking crazy, right, about cuts. Bowman goes on again to say a bunch of other shit and diarrhea. And you're likely going to see more of this discussion about cutting rates from now into late July or even the fall. What Bloomberg Economics says, quote, the Fed's preferred gauge, core PCE inflation, likely rose just 2 basis points in May. Remember that. We got PCE coming up. In May, a modest uptick that will offer little clarity about upside risk to inflation in coming months. That's likely to leave some Fed officials still balancing two sides of its mandate rather than shifting focus to upside inflation risks. Along with the May inflation data, the government's report on Friday is projected to show a second month of modest growth in household spending on goods and services. The last 2 months included a steep downturn in sentiment, related in part to heightened anxiety about the possible impact on prices from higher tariffs. Economists will also look to the report's personal income data to gauge the ability of consumers to continue spending. In the 3 months through April, inflation-adjusted disposable income growth averaged 0.6%, the strongest in more than 2 years. Other U.S. data in the coming weeks include May existing and new home sales, as well as 2 surveys in June consumer confidence. On Thursday, the government will issue its advanced economic indicators report that includes an estimate of the merchandise trade deficit for May. In addition to Powell delivering the Fed's semi-annual policy report, he testifies to a House panel on Tuesday and the Senate Banking Committee on Wednesday. Remember that there's so much shit spewed that you can't fucking rely upon that shit. Like, oh, they said this, they said that. Jerome is going to be like shaking his head the entire time that he's there, just going, oh my God, these people are either fucking crazy or talking to their base for sound clips. Get me a bourbon, please. In addition to Powell delivering the Fed's semi-annual reports, he testifies to a House panel on Tuesday and the Senate Banking Committee on Wednesday. A slew of other central bankers, including New York Fed President John Williams, hit the public speaking circuit. Further north, Statistics Canada will release the first of 2 inflation prints before the Bank of Canada's July rate decision. Policymakers are closely watching firmer than expected core inflation and have signaled they remain on hold unless underlying price pressures ease. Industry-based gross domestic product data for April and a flash estimate for May are likely to show a pullback in exports and business investment as Trump tariffs took hold. Elsewhere, multiple inflation releases in Asia, appearances by the Eurozone and UK central bank chiefs, and a prospective rate cut in Mexico may be among the highlights. Asia, it's a data-heavy week in Asia with inflation figures due from 4 economies, as well as fresh reads on industrial output, trade, consumer demand. For investors navigating geopolitical flare-ups and a fragmenting trade environment, the week's releases will offer timely clues about inflation persistence, consumer strength, and industrial momentum across Asia's influential economies. Now, let's take all of this in a whole. We are in quarterly Opex. It goes right back to what I told you earlier in the month. We caught a print on 605. You're looking for highs to hedge, and you're watching major inflection points from now into the beginning of July. It's fairly easy. You really don't need to know all this stuff, do you? Meanwhile, you're getting, whiplash by the news, right? We're going to crash. We're going to all-time highs. We're going to crash. We're going to go to all-time highs. So the rest of the world is wrapping up their trades, putting their collars on, their hedges on, while the market kind of trades sideways, doesn't it? Now, I want to bring one more thing up to you here. And I want you to think about where price is right now. I want you to think about this hearing with the Senate. We got Tuesday and Wednesday, we got hearings, right? And then we get a PCE report, right? So you get this PCE report. We get durable goods and GDP growth on Thursday. So you got Fed Chair Powell on Tuesday, Fed Chair Powell on Wednesday. You get durable goods and GDP growth on Thursday, and then you get PCE on Friday. Now you've got 2 little Fed chairs telling you we might need cuts. Could need them by early as summer. Why? Why are we trading up right now? Why are we trading up right now? Why are we locked in? We kind of probably need to be in a high of trend if we're going to get some bad news. Maybe we get some bad news twice. We're always looking at inflation and unemployment, right? We get unemployment numbers next week, right? Or I think Tuesday, something like that. And then right now we're getting a PCE read. So where are we getting this PCE read? It's this Friday, right? This Friday. So you're always like, well, bro, we're burning because of PCE. But like, we're always like at a price where we're ready to roll, right? Like if we're coming down into, if we're trading down into an unemployment read, and all of a sudden we're up, it's like, oh, bad news, good news, bad news, or good news, right? And then like we come into a PCE or to an unemployment rate cranking, we get blasted down, right? So the market adjusts before we get to where we get to accommodate that news. Make sense? Market trading up on a Monday. Volatility on Tuesday, Wednesday, Thursday. And then you get PCE on Friday. Right? So where would the market go before that? I feel like a bear, you know what it is, right? We're going to crash over the weekend. In Opex, we're going to crash 500 points. And then we're going to blood them down a little bit more with some Jerome Powell testimony on Tuesday. Mike, bring the bucket of water over. We're going to start waterboarding those bulls. And then on Wednesday, we're going to shove them down even lower. And then by PCE and by month end, we're going to be trading 480, and we're just going to, set them down to zero at that point. You're like, bro, that's like 7 sessions away. Trust me, it's going to happen. It isn't, is it? And right now we're trading higher to anticipate what? These reports, right? This testimony. So you may be afforded a place to hedge if you haven't already. Some bad news. And we're going to talk about that really quick. We're going to talk about right here. I think this is the right one. I'm going to read this to you because I know you guys don't read shit. You say you're going to read it, but you don't. So I'm going to read it to you. Take some time inside of this program. We're going to take some time over here in this program. I'm going to read this to you. So this is Wolf Street. Probably the only guy you can trust out there. There's a couple others, but not many. How financial services, a market plunge in April, and a historic cliff dive by recreation services messed with PC inflation today. But a snapback cometh. Now, there's a key point. Now, that snapback cometh isn't doom and gloom. It's just a knee-jerk reaction expectation. That's it. It's not a new trend. This is where oftentimes you'll get bears, particularly, that will fail to show you. They'll show you a chart that's like a year chart, but they don't show you the last 3 years or 5 years. They only show you like a snapshot. They even lie within the charts they're showing you. So 1 month does not make a trend. 3 month begins a trend. 6 month is a trend. And a yearly is a major trend. So one hot read does not make a trend, but we do get knee-jerk reactions out of that. And you see a lot of lying in some of this data from people. Outside of two heroes that push down the overall indices, there isn't anything benign about this PCE inflation data. This is from May 30th. The PCE price index released today by the B of EA was benign. The overall PCE price index and the core PCE price index barely ticked up on a month-to-month basis. And on a year-to-year overall basis, decelerated further towards what? The Fed's 2% price target. That's good. And that's nice. But why? Well, the answer is not nice. Two very unusual things happened. One has never, to that extent, happened before in the data going back to 1960. And the other hasn't happened to that extent since the market crashed in 2020, which pushed down the core services PCE price index and the core PCE price index and the overall PCE price index. That's what's not nice, is that we know that those two components will snap back violently. Will snap back violently. Will snap back violently. The PCE or price index tracks not only goods and services that are included in the CPI, but also other categories consumers don't pay for directly, such as many financial services, and it tracks many of those components not by observing transaction prices, but by imputing price levels from other data, including financial markets. This PCE price index for financial services with its imputed prices that consumers don't pay for directly was one of the 2 stars of the show today. You know what this means? Means that I didn't expend a bunch of money in the stock markets and pay fees to JP Morgan that for the first quarter of Q1. I wasn't buying dips then. So they didn't get the money from me for fees. The financial services PCE price index, which features heavily in core services, plunged by month to month 1.69%. In April, by far the biggest drop since April 2020, when it plunged even more based on the values it imputed from the crash of the financial markets at the time. We had what? We went down almost 20% in February, March, didn't we? In April 2025 experienced a big stock market sell-off. a 5-day drop totaling 12.4% of the Wilshire 500 index. Though markets recovered afterwards and the PCE price index with its imputed values went haywire. But what we know that it won't last, that it will snap back violently. So you can see it down here. See it over here? Snaps down and then up. It's snapping down right now, meaning it's going to snap back up again. These are financial services, many of which consumers don't pay for directly, much of it imputed from other data. For example, the imputed value of banking services deposit holders is calculated based on factors like interest rates and the volume of deposits, explains the BEA. It includes fees, commissions at banks, brokers, funds, portfolio management, etc. It includes financial services furnished without payments, for which imputed values are used. It includes services provided by pension plans, commercial banks, and credit unions, regulated investment companies, portfolio management and investment advice firms, trust, fiduciary, and custody activities, etc. Some of the sources from which values are imputed are FDIC data, PPI data, data from stock exchanges and markets. To input the values of those components for portfolio management and investment advice services. For example, various government data, etc. And this financial services PCE price index is hugely volatile. Some of it is related to sharp movements in the financial markets, as like it was in April 2020 and April 2025, and it will snap back. It will snap back. As a matter of fact, the market right now looks a lot like it did in Trump 1.0, doesn't it? We'll actually look at that if you want, but price action in this stock market is very similar. The Fed knows all of this, and Powell has occasionally mentioned the financial services component when it acts up in one or another direction. He might mention it again. Another hero, recreation services, plunged month to month, the biggest plunge in history. It has nothing to do with foreigners not coming to the U.S. suddenly or whatever. Recreation services don't include lodging, airfares, etc. The index includes cable, sat services, broadband, amusement parks, campgrounds, concerts, spectator sports, movies, theaters, gambling, video streaming, vet services, package stores, memberships, clubs, participant centers, museums, maintenance, repair of recreational and sports equipment. And we know it too will snap back by just looking at this crazy chart of month-to-month changes. So whenever we swoop down into these lows, we swoop back up again. As a matter of fact, you see the growing volatility in this? This actually implies, too, that, well, I'll talk about that another time, but that would be a huge tangent. The core services PCE price index was pushed down substantially by these two heroes. The smallest increase since April 2020, when you guessed it, had been pushed down even further by the financial services index due to the turmoil in the financial markets at the time. However, the remaining core services categories showed significant inflation except for other services, month-to-month annualized. So outside of those two heroes, there isn't anything benign about this inflation data. And it will snap back too because financial services and recreational services will snap back. So what does all of this mean? Before even getting into the rest of this, what does all of this mean? It means that these guys already know. These guys fucking know that without a doubt, you're going to start getting hot CPIs and hot PCE. You got oil and gas going through the fucking moon right now. There is no other thing that can happen. And not only that, we're coming into the summer season of recreation, aren't we? Yeah, I'm going to go on vacation. I'm going to do this. I'm going to do that. I'm going to go down to New York City for 4th of July and be with like the crowd, the masses. Nothing's going to happen to me, bro. You know, so you get like the masses, out there doing their thing, regardless of what you and I look at. And so these things are going to crank. Into the summer months, right? You're going to see inflation start popping. Now, is it permanent? Probably not. Is it, can you make a political statement with it? Yeah, sure. But the consumer is still pretty well off. So I want you to think about this. If the consumer is at a 10 being awesome and a 1 being horrible, consumer is probably at a 6 or a 7 right now. So between now and summer and maybe early fall, you will likely be able to absorb this inflation. And you're likely going to get a more soft Fed along the way. Not cutting all rates, but telling you they will be there to cut rates and cut them when we see that data. Now, some of you are going to argue, hey, you're going to see it before, Cap. That's why you're seeing the talk right now. I think you're going to see more of the language changing. You're going to see the language change like these little Fed presidents. You're going to see language changes at this Jerome hearing. And then you're going to see what? A hot PCE. And the market's going to sell down into that PCE and stay what? In range until we get closer to either a cut or a cut after that read or a Fed meeting, right, of some kind, or even after we get out of this Opex period. You want to see like real down, it's going to be after the month end. You get a chance to whack it down during Opex. You get a chance to whack it down during VIX expiration. And then the big boy is always the quarterly roll. That's the month end. So do we know what's going to happen as of yet? No. Do we know when the cuts are coming? No. More than likely, you're going to see a hot print. And if you don't see it this month, you're going to see it next month. You're going to see PCE come in cranking. And you're going to see all the people out there going, oh, my God, we're in so much doom. That's right. They said we should have cut. Those 2 Fed chairs were telling us, oh, and look at that. We didn't cut. The market's going to be in a high, selling down into it. You're going to have your hair on fire. And I'm showing you before we ever get there right now what's going to happen before we get there, right? Why they're talking about this, why they're bringing this up. They already know. They already fucking know. And then meanwhile, you're going to see someone with their hair on fire. Maybe you want to see the Fed chair cut tomorrow. So if we get a PCE hot print, we look through it. I think it's easier to drive price higher, sell into it, not rely upon the Fed to cut just yet, catch those 1 or 2 hot prints, take a beating. The consumer takes a beating, sends them down to like 3 or 4. And now you kind of know that the consumer will no longer absorb that high inflation. And I don't mean absorbing it and whining and bitching on Reddit or on Twitter or Truth Social. I mean in reality. Likely by the time this summer ends, you're no longer going to afford. Unless you get wage spiral, that would be the only other way. At some point, you're going to say by end of summer, I guarantee it, I ain't paying that. If some of you probably already have. Actually, a small percentage of you are fucked. A larger percentage of you are probably already there. But by the end of summer, the majority of you, like 70% of you, will be like, we ain't doing this, baby. I ain't paying that shit. Hell no. Nope, we don't have the money. It's nope. No, you can't raise the household debt ceiling. No, we're not taking out more credit cards. Nope, no, baby. I told you no. You know what I mean? You're going to get to that point, likely at that time period. So what does that mean? You run it hot a little bit. You start to get a little bit more talk from the Fed. Don't worry, we'll be there. And then eventually you'll get more cuts. And you should see, are we going to see a recession? And you'll get an argument from people saying, we'll probably see the recession in September, October. They always front run the recession. Market should crash now. We don't know that yet. We really don't. There is no data right now that suggests a recession. There are 2 recession indicators saying it, but they've been wrong multiple times already. So the market probably won't unwind that just yet. The market would probably want to see like a couple hot reads, some cuts. If you keep unemployment, below 4.5, you keep inflation, no velocity in inflation, no velocity in unemployment. And as a matter of fact, unemployment's been at 4.2 for like a year. So you need to see those things before you start pricing in a recession. You need to see like the velocity, like literal velocity and inflation going up. I mean, not like this, but like this. Start seeing unemployment like that, not like this. That like sideways shit, or 2 months of inflation does not make a trend. So you get a couple hot reads, you cut in rates, and inflation comes back down. There's no unemployment then, right? So there's no real there's no recession trade as of yet. And what has the Fed done? The Fed has not cut. Not only has the Fed not cut, Fed has not cut under political pressure. Fed has room to cut small cuts right now. And the Fed is not the bottom of the cutting curve either, right? Which is usually bad. Like if the terminal rates, right? If the terminal rate in the downside trough of cutting, they want, let's say, 2 or 3, right? That's what they want. They don't want, like, our government, our Fed, our Treasury, nobody wants us going to 0 again. We had never been at 0. We only went to 0 after the GFC. So they don't want that either. So you're not going to get, I mean, even just the thought, hey, we're going to start cutting and we'll be cutting to 0 before you know it, is not what they want. So I would expect, if you got 1 or 2 cuts to bring hot summer inflation down, I wouldn't expect any more fucking cuts. And only if those cuts don't tame in this inflation, because their hope there is what? The consumer is going to absorb this again, and then the next go around, we'll wait and see if they accept it. And if they don't accept it, they're going to start telling corporations no. Does that make sense? So then you get into the fall and the winter, and you're going to be watching the consumer. They're banged up now, bro. Let's see if they say no. And also, let's see if they get really fucked up. If we've gone too deep with them. Is tariffs impacted too much? Is the war impacted too much? So it's going to take time before we get to price in a recession now, bro. That recession might not ever come, and that recession could easily get pushed off in a 26 or 27. Easily, where we are right now. All right, so there's the PCE Senate, Jerome Powell crap show that's coming up. If it was me, I would expect that we're going to try to grab a high today, tomorrow, and then you're going to see some selling into the weekend on this like inflation shit and doom and gloom from the Senate and from the House and Jerome Powell talking about possible inflation spikes coming down the pike. You're going to then actually catch that bad PCE print, and you're going to get some motivation for the Fed to begin making some cuts here, either in the summer or in early fall, to try to combat that inflationary environment. Higher gas, higher oil, not helping at all, right? We know that, right? We know that. I doubt Trump ever thought, hey, I'm going to have to deal with that inflation, right? There's no fucking way he did. And it hampers him from like more tariffs. It really does. Like all this Israel Iran stuff like totally thwarts like we're gonna raise the debt ceiling, we're gonna spend because that's what they're doing, right? They're spending, aren't they? Right? We got higher gas prices too, right? That thwarts the want to get all of this other stuff done early. Now, if the Israeli-Iran thing had come later, it would have been fine. But with like the big beautiful bill, with the debt ceiling, with inflation, it's not, the timing is shit for Trump, at least in my view. I don't think it's a big fuck you too. Let's talk about politics of this stuff. Well, let's talk about politics. I'm going to let you know that there is politics, but the Fed does comply with every regime to some extent. And I believe seriously, believe more that there's more of a public show from Trump, and Jerome knows that it's a public show. You got to remember that Bessent and Powell meet every week for lunch. You have to also remember that Bessent is doing QE Light right now. So even Bessent's kind of faking it. Like, He's doing what he can do under his helm or whatever. And then Jerome really doesn't have to do anything right now. And front-running cuts is not the norm. So these guys, when they say this stuff, it's more than likely covering their asses in the future. Like Jerome knows the inflation is coming. Trump knows the inflation is coming. So Trump's best thing he can say is he needs to cut now. Right? It helps him to get all of his other stuff passed, and he knows he's going to get a hot print anyways. So Trump looks good to his base. Jerome looks like he's being, waiting. He's in control of the ship. And meanwhile, Besant is already doing QE light. He's doing it. So everything seems to be in place. I want you to think about that stuff before we get what happens. And as a matter of fact, even these little chairs speaking today all falls in line with what I'm saying here to you. Oh, don't worry, we'll just send out some speakers, start softening the tone now. We're already in motion for this stuff. And there's no way around it. So no more cheeses with cheese whiz. 100. That was the point of that conversation about Cheez-Its the other day, by the way. Some of you watch closely. You get a gold star, Flag. I use a lot of soliloquies in this show, by the way. Good job, Flag, for clicking what he was talking about last week. I'll just talk about Cheez-Its. We'll keep it simple for these guys. Okay. So, what else do we have going on here? Bowman goes on to say, before our next meeting in July, we will. So he says earlier this morning, he said, as we think about the path forward, it's time to consider adjusting the policy rate. As inflation has declined or come in below expectations over the past few months, we should recognize that inflation appears to be in a sustained path towards 2%, and that there will likely be only minimal impacts on overall core PCE inflation from changes to trade policy. Okay? So they're saying this won't be sticky. We've probably achieved our goal because we're about to get a pump in inflation, right? But it's probably not going to be sticky. Because it'll be sticky unless you cut rates. It probably won't be sticky, though, after the summer. The consumer will, at that point, say, fuck you, no. The consumer data will get weak. I promise you. He goes on to say, though, he goes, before our next meeting in July, we have received one additional month of employment and inflation data. If upcoming data shows inflation continuing to evolve favorably with upward pressures remaining limited to good prices, or if we see signs that softer spending is spilling over into weaker labor market conditions, such developments should be addressed in our policy discussions and reflected in our deliberations. Should inflation pressures remain contained, I would support lowering the policy rate as soon as our next meeting in order to bring it closer to its neutral setting and to sustain a healthy labor market. Bowman discussing the low levels of Treasury market liquidity, we do not know exactly what circumstances may lead to a future stress event or how it will manifest. And continuing to impose up unwanted limits on dealers' intermediation capacity could exacerbate a future stress event in this critical market. But we do know that these events have raised concerns about the resilience of the U.S. Treasury market. Therefore, we should continue to actively monitor indicators of market functioning. Recent trends in both market liquidity indicators and survey responses suggest that this problem has persisted and may be becoming more severe. Low liquidity can create more volatility in prices, exacerbate the effects of the market shocks, and threaten market functioning. Also, we've got some news being picked up by the wires this morning. The Israeli military issues evacuation warning for Tehran. Russia's foreign deputy minister, we are working with Iran in various areas and would be irresponsible to disclose details of this cooperation. Trump issues a strong warning towards Russia, per Truth Social. Did I hear former President Medvedev from Russia casually throwing around the N-word nuclear and saying that he and other countries would supply nuclear warheads to Iran? Did he really say that? Or is it just a figment of my imagination? If he did say that, and if confirmed, please let me know immediately. The N-word should not be treated so casually. I guess that's why Putin's the boss, by the way. If anyone thinks our hardware was great over the weekend, far and away the strongest and best equipment we have, 20 years advanced over the pack, is our nuclear submarines. They are the most powerful and lethal weapons ever built, and just launched the 30 Tomahawks. All 30 hit their mark perfectly. So in addition to our great fighter pilots, thank you to the captain and the crew. So we do have some more shit talking coming out from Trump and Russia over the weekend and this morning. That's right, baby. Transitory inflation. Well, if you think of it like this, right? There's another way to look at this. So if you have like ramping inflation and you're like raising rates at some point to tamp it down, and we get another spike of it right here. So you get cuts here. Theoretically, if you get cuts here to knock this down, if we go into stagflation and the market reacts that way, you get the last of your cuts when in a down market. We're not there yet though, but this could be like 2026, 2027. Not so much at the moment, but if we're at the end of a tightening cycle, I wish we would raise rates, to be honest with you. I'll be honest. I wish we would actually like get hit with two rounds of inflation this summer, raise rates again, tamp down and murder the consumer just a little tiny bit more, and then roll into major cuts and dump the market. But I think they're going to try to extend this market a little bit deeper, a little bit like I think they know that we're at end market, so I think they're going to try to keep this market afloat for the rest of the fucking year. I don't think they get 20. I think 2026 is like a real stretch here, but yeah, I could be wrong. I could be wrong. I guess like let the cycle pan itself out. I don't want to see us go back to zero rates. I'll be honest. I would really like to see us stay at some kind of terminal rate of like 2 or 3, somewhere in there. I'd like to fucking like you're saying, like it took like since 2008 to get back to like a rate above zero, and we just went through COVID. We should have fucking put out like 100-year bonds and that shit. Anyways, it's just me. It's like the show goes on again, right? We just keep printing money. Like to fucking just hoard out some more. You think we get a new all-time high? Oh, I think we're going up and to the right all year. We're going into like some kind of blow off top, in my view. We're going way higher. If this is anything like 2020, April of 2020, anything like 1998, 1999, 2020, if we're anything like 1928, 1929, for anything like the past fucking, seriously, the past like 10 we're in bull markets, we're going up into the end of the year in a big way. You just got to know where to get those bottoms. We're coming into one right now. Next 2 weeks. Be ready for it. Wherever that may be. If it's at 64 or 92, it's going to be a fucking perfect long for the rest of the year. And we'll know. We'll know if it's at 90 or 92 or 60 or 64, somewhere in there. Just read the here. I'll hold on a second here, guys. Think about this. Hold on here. I want you to think about I want you to think about data I want you to think about data in a few different ways. So they're trying to send us down right now from 10 a.m. Here goes your down move right there. Now I want to show you how you guys get your news. Like I really do. Hold on. Or often how you get your news. I wish I could show this somewhere else, maybe. Let's show this back over here, maybe. Be a good place to show it. So oftentimes you'll get like a chart. And this could be like just a year chart, not a day chart. Pretend this is a 1 year chart. Or even like a 3 year, or even a 5 year chart. Doesn't matter. They'll show you this trend here. They'll be like, look, it's going down, bro. Right? It's gonna crash, bro. Even if it's gone down like this. Even if it's broken trend for a minute. They're like, bro, we're fucked. It's gonna crash. What they don't show you is that the other 5 years, they don't show you that you're, back in trend. They don't show you that. I should have showed it like this. This would be a better way to show it. It'd be like, hey, bro, we broke trend. I'll just show you that right there. Broke trend, bro. Bad news, bro. Market gonna crash. What they don't show you is that you're back on actual trend. Maybe it was more like that. So you get like a lot of like people don't know what they're talking about. That's number one. Number two, you have like a 3 month trend, right? You have like a 3 month trend right here. And then you even have like a year trend, right? Maybe this is a 3 month, this is a 6 month, this is a year. So even within this trend, you have little squigglies, right? You get a month, then you get a 3 month, then you get a really out of whack one. So even within all of these little squigglies, there are other squigglies, right? There's some bigger, some smaller. And you really want to be watching the year, and you want to really be watching it far, far, far back in time. And you also want to be watching, like, is the next one down lower? Are we starting to get that, that true trend change over 3 months, over a year, over 6 months, over a year? And do you start pricing that in to where the consumer is fucked? Or any other data. The last thing that happens with data is that you get one chart that looks like shit, but there's like, 10 other charts and 9 out of the 10 look great. So then you need to like look at the whole as well. Make any sense? And PCE right now is a great like one-off that looks horrible, but it's going to come right back in line again. So do you get knee-jerk reactions? Yes. Do you get this? We're going to crash. You got to be careful who you're following with that shit, because it's data. Like, statistics are oftentimes easy to easy to pick what you want to pick to sell news, or they leave out other critical information, like hey, what happened in the last 5 years, not just the 3 years you're looking at. What about the 10 years? Oh, we're back in line again. Or why did they cut? Is it to arrest velocity in data? The last time we cut was more than likely to arrest volatility. Like we had numbers that were like, you know, we're like, you got trend on inflation as an example. You get this like super ramp in inflation. You get the Fed that tells you we're going to start cutting or start raising rates right here. Coming down, and as we're approaching, do you see the velocity in data? So they do two cuts or a cut or two, right? And it just slows that data down. So if you get, you know, just one or two, and you get a cut and a cut, brings it down a little bit longer, and then all of a sudden something else pops up where the consumer can no longer take on inflation, and a bigger whammy happens, and then the consumer's kind of fucked there, right? At some point, right? And then the market starts to go down, and then you start to see the cuts, right? Cut. Market down, inflate. Well, it wouldn't be there. It'd be like somewhere in here. But you'd see market down with inflation down, is my point. So velocity and data, never ever want to see it. So far, not seeing it. And the more that the Fed can, literally, the more that the Fed can keep that data on the low, this market will extend. Trading down now into 12 o'clock. We get new flows here at 12. So just a note that we're getting new flows again between 12 and 12:30. Could see a squeeze. Maybe something like that. We'll see if these sellers can come back in again somewhere in here. Right about there. Right about there. Nice. I like the wolf. Who made Bork? Thank you for making that that wolf emoji. Okay, so we got the economic data out of the way. We've got the expectations for the rest of the week. You got a lot of volatility this week. We get the markets able to move. Rate cut in July. Markets are taking Bowman seriously. What else we got here? Let me check the wire here. Qatar has shut down its base, its airspace, signaling an imminent attack on American bases. 6 super tankers carrying crude oil have performed U-turns in the Strait of Hormuz. Just a warning to you out there right now. 5 minutes ago, Qatar did not take the decision to close its airspace lightly. Over a dozen inbound aircraft have been forced to divert, and dozens more are currently grounded on Doha's Hamad International Airport. Just waiting on the reports of American bases coming under fire here. My year end, I put them out every quarter and month. Every month and quarter, I adjust them for year end projections. It's on the website. Look up. I could do a daily outlook, a weekly outlook, a 4 hour. I do an hour, a 4 hour, a weekly, and a daily and a weekly. So you can always see on the website for expectations. I do it on the stream sometimes. Sometimes I'll put it out here on the stream. But if you're in our Discord or on our website, if you're a member, you get that updated regularly as it, like you fart in the wind like a butterfly, and you like make one movement down. Maybe it's a little bit down there, a little bit up, a little bit up there. But we keep traders updated. We trade from quarter to quarter and from month to month, so it doesn't really matter. The only thing you really need to know is that if you're in a bear market or a bull market, you get 2 dip buys a year, no matter what. Every year. Every single year. Even in a bear market, you get dip buys. Should be a terminal rate of 6.5. Me too, Johnny. I'm with you. I agree with you, brother. I agree 100%. Like, I'm with you. Like, I think we should. I'll tell you what I really think. Like, you want like my trader hat off and my Main Street hat on? Fucking, if when we get inflation spikes this summer, you raise rates. You hurt the fucking consumer. The market goes down. And the consumer then triggers into telling these companies to fuck right off. And they're not going to pay it. And then you bring in a new round of businesses and companies that compete with our current, Walmarts and Amazons, and you get some fresh blood. We're not doing that, are we? I'm with you, dog. Like I really want to see that. Like I want to see because right now if they start cutting, then you're down low enough that they're looking for, they're piking for for zero, aren't they? They're piking for fucking zero is what they're doing. They're fucking, that's what they want. They want zero. Like they're not off the fucking cocaine yet. I'm with you, bro. Like with my Main Street hat, my trader hat, like they want zero forever. I don't know what to say to you, man. I'm with you, dude. Year end's the same. Nothing's really changed. We're just looking for a low to get long. We should enter that window, or I should say we're halfway through the window right now. We're going to get long and party. And then we're going to get long again in the fall, party again. Now, February, like I would say anywhere from December to February, we're going to be watching this shit closely because if shit starts to deteriorate, that might be it. Boy, that data chart just brought back flashbacks. I went to like an internet archive and started looking at 2008, and there were a bunch of like white papers written back in 2008. I found them fascinating. They were saying way back in the day. It's not that long ago, but they were like these smart quant type guys, and they were talking about how they expect more volatility on like macro stuff, not just data like the stock market in the future. These guys were talking about this like 2007, 2008, and they were like, oh, you should see like volatility expand. Like you start to see more, like you get Volmageddon, then you have the last Volmageddon 2.0. And like you should see expansion over the decades moving forward. I was just looking at that PCE and I was like, God, that looks like the same fucking shit. And then you get like more manufactured, like the knowledge of that, you get more manufactured crisis. Like when I was looking at the charts for COVID, when I was looking at velocity and triggers during COVID, you could see it clear as day that we were going to roll. Whether we had COVID or not, it didn't matter. They're like manufacturing. They're not manufacturing, it's there, but it's almost manufactured. And like you're piling stuff on with it too. Like if you're manufacturing it, then you're manufacturing other shit too. I did that looking at war. I was looking at wars. And I was like, God damn, like it's so disgusting that the US, like, I realize that it's because of Bretton Woods and the reserve currency is the US dollar. So there's some deference to that in the world. It's got to be a part of the reason, but it's fascinating to watch how even in wartime, like our markets are in line with like Opex's, quarterly Opex's, that kind of shit in general. There's only a few times in history, it's usually unknown unknowns. Like something unknown happens. Like even being told today that there's potential for like U.S. war or bases being, I don't know, some rockets fired at U.S. bases. The fact that you know this is a huge difference. It's when you don't know something. The only time I've ever seen the market like not recover quickly is usually when it's truly unknown. Or well actually, I shouldn't even say that. You'd normally see a squeeze. So what happened in that situation is you'd actually see a massive squeeze, and then we go straight down. And that happens in the inverse too. A lot of times you get good news, and it's like blood. If we're positioned short, like a bloodbath, and then they get long with the rest of the market, and it goes up. You can usually tell if you get a truly unknown. Usually, you'll see the inverse happen in the market. What do you got there? Yeah, it's always good to like it's always good talking monkey to go to like the a smaller, finer time frame. Like if you go in like if you go like the Gulf War was a great one. Like we stayed on track through Opex. Then we slammed down, and then it was right back on trend again. So if you like condense that chart, it looks like it was just we didn't even care. We just kept going up. But there was a little window where they priced shit in. It's there. Grinding on down for a new low. We got a new low in the half hour right here. It's got a new low at 12:01. Should start seeing some more violence to the downside for the next hour and a half. If you can catch any kind of a high over here to get more down, try to grab it to ride this shit to the downside. This is a liquidity grab I've got priced in here. So if you can get like a nice low tag, and then we're right back down at it again. This is like clockwork every day, isn't it? What else we got here? Rate cut imminent in July? I don't think so. Maybe. I would like to see the trade to like 60s or something. There's something else here too that I haven't said to you guys. If you like if you do like the big bloodbath in summer, like early, it's like 60 or something. It ends up like fucking up the seasonal expectations too. It totally fucks with it. Like seasonal expectations kind of go out. They don't go out the door, but you then look for like a buy in like September, October. But then we like ramp. It's like super ramp the next year. It's like a super fucking ramp. It's like vertical. So like there's always for every action there's an inverse. Like if we do the spot up vol up trade in July, all of it comes back. Like the whole thing comes back. So you get like a more violent move down in late summer, early fall. There's always like for every one of these like outside the range things, it all comes back. If you're looking for a hedge, like an upside hedge, I'm still looking for 6075 at least 6050 6075. I think we might get it. We might have a chance. There's short-term better ones like the Q's trade is great and UUP is great. Oil is a good hedge, but I think until after we get past this window here, I'd like to see some unknown news that just rockets us up. And you just like go up there and just grab it. Patience. I think patience is the I think patience on lows and patience. We're never gonna get another high again, bro. We're never getting another low again. You wake up like 2 days later and or a week or two later and you get it. You're like, sweet, let's buy it. Everyone else's hair is on fire, and you're just like the guy doing the right thing at the right time. You'll usually notice that when those times are apparent, you'll see in our Discord, you'll see specific people coming out to play. Then you know that we're either at a top or a bottom, major one. I like triple leveraged Esto. But I would only like it if we were trading like 610 today. I'd be like, fuck yeah, let's do it. I think I'm drawing this up for you, right? Is this not clean enough for you? I got us going down. I got us going down, baby. I don't know. I ain't got no C's in here. I'll take a quick break here. Give me 1 second. I want to check one more thing here. We got there 6,599 puts galore. Yeah, they're a little late. We already know about the imminent attack. That news came out like that news came out 21 minutes ago. It is interesting where I'm going to put this in this brief. When we start trading under 90, 92, and asset managers become sellers. There was a new low back here. There's a low. There's a new low and a new low right here. The new high, though, right here. Still haven't checked this yet. I'd like to see a check. These look like buyers, not sellers at 12. Let's just check this on an hour and 4 hour really quick too. Buyers here in the hour. Way up there. All that's still valid. Let's watch out for buyers here. I'm trying to come in right now. We want to see him reject to get the next leg, I think. Let me go potty really quick. Like 5 minutes. I gotta go potty. Well, I'll put the news back on.
Threat to Iranian aggression over a US airbase in Qatar, the Al Udeid airbase. So following the reports as well, we're now seeing reports that US jets are scrambling over Saudi Arabia. China now urging citizens in Qatar to avoid the Al Udeid airbase.
They're only for pro traders, but if you ask riding the NAR, or if you ask a pro trader in the Discord, they might pop one off for you. I don't care if you guys share information. I put them on the stream sometimes, and I sometimes put them in a brief for supporters. Like every quarter, I will, or beginning of the year, I'll put a brief out showing everybody. You'll see them floating around. And I don't think riding the NAR puts them out until the first week of after the quarter end. There's so much bad data. Not bad data. There's like, so here, hold on here. So I just got asked, or I don't know when I got asked, but I got asked, are quarterly briefs only for pro members? No. So you get a quarterly brief from me. It starts with the quarterly brief starts with a like pre-brief, like a preview. And then as we we'll do like attachments to it, addendums, as we come through that quarter end. And then we'll have a final brief on the beginning of the quarter. And you'll get a quarterly expectation. That's a pro and supporter level. Now, those things do change throughout a quarter, right? If you get some liquidity first month, we start trading down or something like that, you'll get updated on that stuff. But if you want like up to the minute quarterly stuff or whatever, pro traders, we have someone on staff that will get you, hey, this is the current
the Trump administration
quarterly outlook or year outlook, like right now at this moment.
Again, axial Trump administration preparing for an Iranian attack on U.S.
Does that make sense?
bases.
So, but you do get them from me as a supporter. I'll either talk about them on a show, a private stream, or I'll post them in a Discord. But if you're like up to the minute, like what's Tesla expectations, or what's we do it like Pro Trader gets everything, like currencies, crypto. They get anything that they want, and they have a 24-hour like
citing US officials
button they can hit and say, "Hey, can you give me this chart?"
In the Gulf.
Then they'll get it for you, within reason, of course. I can't cover everything, but I try to cover most of the major meme stuff. Mag 7, like most of the normal metals, currencies, currency pairs, oil, gas. I cover all that shit. Cover most of the major commodities like wheat and soy, beans. Like I'll cover all that for you. Anything that you really want, something obscure, as long as it's kind of a major still, and whatever it is, I can usually cover it easily. Sometimes it gets difficult. Some shit I can't give outlooks on because it's like a meme. It's hard. Some memes are hard to track. Not all of them, but some of them are more difficult. Some stocks don't trade on a trend. Oil is a good example of that. Oils are very hard chart to track. It's not easy. And there are stocks that are like that too, like Boeing. It's a hard one to track. Good question. You guys want a trade of the day? Yeah, hold on. I'll look at that right now. That comes out over the 4th. We got to talk about that too. I still haven't gone to the bathroom. So taking a vacation. In this vacation, I normally go on vacation. Now, I have not taken any real vacation at home. This vacation in particular, I'm working on launching stuff for you guys. One of them is going to be stock picks. You're going to get that on the website and in a channel so that you can track it, and there'll be an ETF and all the other craziness so you can track their performance over time. Now, let me see if I can find anything right now. Hold on. Give me one quick second here. Man, I want to sell that so bad. this in a higher frame here. Oh yeah, I want to sell that fucker so fucking bad right now. Let me look at this really quick. This might be a good example of something. Look at fucking Sezzle. Jesus Christ. Like SEZL has just broke out. Trading $142. Just like I want to short it, but you can't. It's got a nice if you look at SEZL, it's got a really nice like daily death candle on June 17th. But it could be something that takes a while to short. It doesn't mean it's going down. I bet you the dip gets bought at like 132. It's going to take a while for it to fucking roll. Look at the next one here. Hold on. Let me look at some here, see if we can find something for you guys. This is Reddit. I don't think Reddit's ready to buy just yet. But it's almost ready to buy. I would love to see like Reddit go down here. That's 125, 117. And it's just begging for a bloodbath. Look at it right now. It's still begging. Oh, sorry. I'm going to go back to the main screen. Seeing some blood right here on this imminent attack. Reddit. I want to see Reddit go down. A little bit more pain in store for Reddit. So you can short that. Short the other one I brought up, SEZL, but I don't think it rolls just yet in a big way. SEZL is dangerous. It's like whenever you get like major candle reversals like that, they can take like weeks, months to work themselves out. Reddit, on the other hand, I'd love to see that fucker just bleed, just into the first of July. Let me check a couple others here. Yeah, be short on UMAC. Be short on IE.
According to sources, war risk shipping insurance rates for voyages to the Middle East Gulf jumped to spot 5% from spot 2 to spot 3% a week ago, following the US strikes on Iran. Just insurance.
I want to see fucking TEM go down too. You guys heard some of those already? I'm in like short mode right now. CRCL. Nope. I mean, I see the wick you're talking about here. I see the big old wick. You want that to turn red first, in my view. Wait a minute. Hold on. I might be in the wrong chart. Hold on here.
So according to Western,
You still want a red
has
fucking
been
candle
credible
first.
Iranian
No,
threat
it's too
against
dangerous.
the US-run Al Udeid Air Base in Qatar.
CRCL's too dangerous.
So again, this is now according to Western diplomats being cited by the wires. Confirmation now that there has been a credible Iranian threat against the US-run airbase in Qatar. Wall Street Journal reports Iran moves launches for possible attacks on US forces. Again, Wall Street Journal reporting that Iran moves launches for possible attacks on US forces.
Dude, no liquidity grab up here. Couldn't even touch the 5-minute. I guess not, huh? Just said fuck you going down. That's yellow. This is red. That's now red, not a target anymore. Oh, that's not orange. That's red. I was hoping for a hit up there for a minute before we start running to the downside, but they just said fuck you, no, we're going down. Now yellow. That's now yellow. That is red. Targets to downside right here. Oh yeah, baby. You know it. 589.74. Woo. RBLX is like CRLC. Like they'll be weak, but they ain't gonna roll. Or they ain't looking like yet they're gonna roll. I'd need to see the first red candle. I would need to see like a daily candle with a wick above it that's red. And even then, it's a process. I showed it once in the stream. When you get an actual top like that, it can take like days and weeks. You look for if you see if you see on a daily basis a big wick red candle, not indexes, but like stock particularly, you're gonna get another chance more than likely to top tick that shit and get short on it. Almost guaranteed. Not always, but it's very common. Trading 594.12 right now. I'll be back. I gotta go back. I gotta go to the bathroom. Let me go potty really quick. I told myself today, I was like, I'm gonna go to the bathroom. I'll be right back.
So ever since the closing of Qatari airspace and the idea of Iranian attacks on US air bases in the region, we've been seeing US stock indexes just paring their gains down. Now we're in the red. S&P down 0.2%, WTI oil up around 0.13%, just paring back and pulling back from those losses. So we just traced back that Wall Street Journal piece as Iran moves launches for possible attacks on US forces back to its source here. And so reading from the original piece, it's from a reporter on X. They say Iran is moving missile launches into place for a potential attack on US forces in the Middle East in response to the surprise American strike on their nuclear facilities, according to US officials. Not really anything new from the original post. Axios reporter on X now citing an Israeli official saying Iran is preparing to fire missiles at American bases in the coming minutes. Treasury 5-year yields falling 10 basis points on the day to around 3.86%. So explosions heard over the capital of Qatar. So again, multiple sources on X here saying explosions heard in Qatar, explosions heard over Qatar capital Doha, heavy aerial activity over Baghdad as well. S&P 500 extending declines here down around 0.5%.
Close them.
Axios reporter on X says Israeli officials tell me that Iran launched 6 missiles towards the US bases in Qatar. So again, Axios reporter on X, Iran launched 6 missiles toward US bases in Qatar. WTI oil actually seeing some weakness now off the back of that. WTI down around spot 3%. So WTI down around 0.8%. According to a witness, again, further explosions now heard over Doha. That's Qatar. Source familiar telling I-24 News that Iranian missiles were launched at American bases in Qatar and Iraq. Turkey bureau chief on X says Israeli officials said that Iran also launched missiles at the American air bases in Iraq. So again, just to repeat that, American bases in Iraq also potentially under fire from Iran. So WTI continuing to fall off here, down around 2.8%. So one missile was reported at a US base in Iraq. So again, Iran has launched attacks targeting Qatar and Iraq, as one missile was reported at a US base in Iraq. So US and Brent crude futures falling over $2 a barrel in volatile trading. Al Arabia correspondent says US forces in Iraqi bases have entered shelters. Air defense system activated at the US Ain al-Assad air base in Iraq for fear of potential attack, according to military sources. So Tasnim now reporting Iran launches missile strikes at a US airbase in Qatar. So there are also alarms being sounded at the US Al-Hirar Air Force Base in Iraq as well. Fox News reporting that the UAE airspace is closed. Let's keep in mind that Trump due to be meeting with his national security team at the top of the hour, so we'll be looking out for a readout or a statement following this meeting.
Yeah, we're just talking in the Discord briefly about is this bad? No. The answer is no, it's not bad.
Senior White House official says the White House and the Department of Defense are aware of and are closely monitoring potential threats to the Al Udeid airbase in Qatar.
Trust me, if some guy in Skokie, Illinois, I don't know, some guy in like the middle of nowhere, Alaska, knows that there's an attack before it happens, you can probably bet that this isn't bad. When you don't know, that's when it's bad. Hell yeah. Yeah, Patriots have got I've volunteered for Patriot duty. Yep, hold on. Comically enough, when I was in the Army the first time, field artillery wasn't big on Patriot batteries. They were still like lots of like, we were still in like this like military structure of like divisional leadership instead of battalion level, brigade level combat teams. Like we switched like the we switched we were like always trying to fight the Russian war, and then we switched to fighting the war in the Middle East. So you could, or if you were like combat arms and you were field artillery, more than likely you were getting on like the 155A battalion. Frequently, that's what you get. But I volunteered to help some Patriot missile batteries once, and it was fucking wild. And they kind of sucked years ago, but they've gotten much better. They're badass. I don't know if you've ever seen like a Patriot missile battery. They look like a toy on a picture, but in person, they leave behind this like huge fucking backblast area. They're fucking crazy.
Operation called the Annunciation Victory launched against US bases in Iraq and Qatar. So Iran's.
Have you ever witnessed one go off
attacks against Iraq and
from afar or within?
Towards US bases in Qatar, according to.
They have these like truck. They have two different trucks. I think 2 or 3 different trucks. One's like a generator, and then another one is the command. I forget what the truck is called. Hammer. It's not a Hammers. It might be a Hammers. I'm not sure. It's been a long fucking time, but oh, I gotta check my volume is all fucky today. Check 1 2, check 1 2, check 1 2. Maybe it's that. Check 1 2. Is it getting better? Oh yeah, baby. That sounds better.
Reporter citing an Israeli official on the number of missiles launched as Iran launched 10 missiles towards US bases in Qatar.
That was so my point in the Discord was that if everybody knows that there's a missile strike coming, it's not a bad thing. I mean, it's bad, of course. You don't want to see anyone lose their lives. But if everybody knows, it can be priced in. It's when nobody knows something's going to happen. Something bad really does happen when we get shocks, right?
Israeli military say that they.
Oh, you have been to Crete, Dog Breath?
On missiles and drone storage.
That's fucking crazy, right? They put like in the permanent permanent installations or semi-permanent, if they have time, they'll pour like a fucking, it's like a 4 or 6, man, I'd say like 4 feet. No, maybe not 6 feet. It's got to be like a 2 or 3 foot thick concrete pad for those fucking things. For like the blast area. It's badass. And then they put these like big fucking concrete walls up around them.
So again, just another reminder
to try to stop incoming
Trump due to be meeting with his
and them getting
team,
rocketed or blown up.
Expecting media availability for this meeting. We're just going to wait for a potential readout or a statement following the meeting.
It's like if you're like a Patriot battery operator, fucking that's a scary. Oh, I think I was trying to talk about this in the show one day, and I got sidetracked, of course. But like, there are some jobs in the military that can seem awesome until you figure out that you're a sitting fucking duck. Like, there are other jobs. I think I went on a tangent about 88 mics one day. How that's like one of the worst jobs you could have right now. But there are other jobs that are worse that you don't get bonuses for. Normally, like an Air Force base, ship, like the Navy, Air Force. Like if you're a Patriot missile battery operator of some kind, like your FDC or something, or whatever the fuck it is you are in that goddamn battery, like you can't leave, and you're a target. You're like a big sitting fucking target. People want your ass. It's like being a saw operator. Like you're like, oh, the saw is fucking dope, but like anytime you return, you're the guy. Like looking at you, that guy over there is laying down grazing fire. We need to take his ass out right now, right? And that's oftentimes what it's like on a ship or on an air base. You know, you're like target number fucking 1. Same thing goes for like air defense systems. you ever notice that like the U.S. pops out all these fucking videos and they're like, or the Israel right now, like, oh look, we're gonna take out this SAM site right now, and we got video of it. And we're gonna post it on Twitter. You don't want to be that fucking guy. Like, can you imagine being the fucking guy at like a SAM missile battery in Iran right now? Your life's gotta suck. Like they're hunting your ass down out in the middle of a fucking nowhere desert. Can I get like a handheld control from like 100 fucking meters away? Or more than that, 250 meters away, maybe? Nope. You're sitting in this hot fucking dusty box in the middle of nowhere. Look at this. They're like hammering right now. I still think the way is down, even if we squeeze here. We should continue to go down. Just an FYI. I'm just looking for a squeeze. Some kind of squeeze. If we don't get that squeeze, we start rolling.
According to some witness accounts on X here, 3 missiles.
You can jump right back in on that short. We'll go down there and party. Not yet, though. There's nothing to do here.
Also, some early unverified reports indicating explosions at the Ain al-Assad air base.
Don't fuck around with this just yet. Yeah, of course, Booker, 100%. 100%. So this isn't actually bad. Like, you know what you don't want? You don't want something bad to happen in like LA, New York, Texas, Florida. You don't want anything like that happening. That happens, the gloves come off, right? You know that, right? Like the gloves literally come off. Like it's the same as Iraq. Afghanistan, like
no Iranian ballistic missile impacts have been confirmed so far, despite some claims on X. Again, no Iranian ballistic missile impacts have been confirmed so far.
Like you gotta be like, you want a death wish? I got one for you. Like, Everybody looks like a nail, and the hammer comes out. That's what I don't want to happen. That's like my biggest fear. Like my biggest fear, and to you out there, you shouldn't be in any of those public places. At least until this gets resolved, some kind of
In
resolution.
mind, we're seeing witness reports that sirens are still sounding at all US bases across the Middle East, including in Syria, Iraq,
Goddamn right.
Saudi Arabia, Kuwait, Bahrain, Qatar, UAE, and Oman. So again, just sirens sounding at all US bases across the Middle East at the moment.
I'm gonna check force status right now. Oh, that's pretty good. Okay.
So just a reminder, about 10 minutes time, we're expected to hear from Fed Scoresby. Fed Scoresby speaking in a moderated Q&A at the Milwaukee Business Journal Mid-Year Outlook 2025, Wisconsin. Text is to be determined, but there is a Q&A.
Just want to see if we're at like Delta anywhere else. I don't see it anywhere else. What about U.S. and Mideast? Are we in Delta? Or where are we at?
Iranian State TV says a strong response to the U.S. aggression has begun.
Yeah. Keep
They
talking.
also add that they will respond to any repeated U.S. mischief.
Any mischief? I'll take this mischief. We can take out your fucking nukes. I'll take these responses. I just don't want to take any bad ones. Oh, right, there we go. Right there's a little, oh, right there. The little T's up there. No shorts here. You need to see the roll in a new, you need to see this. You need to see that low right there. You need to see a roll and then a rejection, and then you can jump on it again.
Also, Iran says powerful, devastating strike launched at Al Udeid base. That's Iran State TV citing IRGC statement on Qatar missile strike. Qatari Ministry of Defense says Qatari air defenses intercepted a missile targeting Al Udeid airbase. So seeing some further declines here on WTI crude oil. Iran's armed forces says US regional bases are a major weakness and thorn in the side of the US warmongering regime, not a strength.
Should be squeezing up here. Looks like the attack is over. All is well.
Futures falling over $3 in volatile trading.
Oh, yeah, it was terrible. It was the Great War of
So Qatar says no incident, no casualties from missile attack. Qatari Minister of Defense says that we confirm that the space and territory of Qatar are now safe and that the Qatari armed forces are always on alert.
So there's this guy that I follow on fucking FinTwit. He does so he's likely he likely has information being fed to him. But he's hilarious to follow. He's like he's from the Iranian perspective. Here's his handle. Don't fuck with him because it's just comical. Because it'll be like, oh, dude, they're so fucked right now.
Right to respond to this blatant attack.
So he's got good intel, but then he like says things that are like something you'd expect, like the plankton. He'll be like, it's starting, and then he's like,
it says no casualties from attack on U.S. military base. Iran's top security body says armed forces used the same number of bombs that the U.S. had used in attacking Iran's nuclear.
Yeah, there we go. Eye for an eye. Okay.
Iran's armed forces say they will not leave any attack on Iran's territory unanswered under any circumstances.
Uh-huh. God.
Iran's top security body says U.S. bases was far from urban facilities and residential areas in Qatar.
You probably want to use it for another reason to short. See if we can catch another short in here. Might be another one up here somewhere. I'd like to see it hold, though. Maybe you can get that one. Come back into the mean again. This will be an important part here. If we do get a turnaround, you'll see price action pop up. And we'll start talking about a rotation here. Man, what a wick on look at the I'm looking at the 1 hour, the 2 hour right now. The 4 hour look. Jesus.
Says US
Look
regional
at the 4 hour right now.
Just reiteration here. Just US regional bases are a major weakness and thorn in the side of US warmongering regime.
If you look at the 4 hour candle on SPY right now, it's indecision.
Top security body tells Qatar this action.
So we're gonna know right now what happens next couple hours.
And brotherly neighbor Qatar.
And if we can break out and over, we could go up for another 2 hours, which would be nice. Up until like let's call it like 2:30 or so. Look at a 4 hour candle on SPY, and then look at a 1 hour candle on SPY. At that midpoint right now. Yeah, plan Z. Plan fucking Z. Maybe I was the only one that watched SpongeBob growing up.
He reports the US aircraft takes off from Saudi Arabia airbase. Iran's just restating that attack on Al Udeid base poses no danger to Qatar.
Yep. Squeeze them, squeeze them, squeeze them. Just a little bit more. Like, take them one more time, even if we're going down. A little squeeze boost. They're just, where are the real sellers? They're up here. I guess they're here. Here they go. It's the real sellers right there. Let's take a look at the 30-minute here and see if they're going to get fucked up here. Don't take a short here. Don't do it. Do not take a short here if you're watching me. Do not fuck around here. You want to see the reversal first and the break below.
Surely expecting Fed reverse.
Do not fuck with this. They will take all your money up here. Not yet. You could try like 96.74, some a little bit higher. Not quite.
Ed Scoresby says it's critical to look at soft economic data at current moment of transition.
It's just like this morning. Don't do it. They will ram a green bar right up your ass here. Do not do it. Not yet. Just want to see the roll happen. I'm going to get back underneath this. They will snatch all your money. I promise you.
$34 counterparties take 165 spot $319 billion at Fed reverse repo operation.
Don't fuck with it just yet. You got to remember, we're still in range here. Like, we are still range bound. You want to be at the very highs and the very lows. And if you're in the middle like this, there can be an easy liquidity grab or squeeze higher. Don't fuck with it. Trust me, just don't. And the sellers are at like, the real sellers are at this moment, or like the real true sellers, they are, where are they? Where are these fuckers at? The smart traders, they're literally at like 598.11. So we're trading 599.91. So don't like, if you're gonna fuck in the middle like this, you have to see the roll. If not, you're trying to like up here. Like, we can easily just, even for a minute, just wham. How do you like me now? So don't mess with it. Not yet. Either you want the roll in the middle or you want to see the squeeze higher to go down. Don't fuck with it. Now, those sellers are up here. So your big Jimber. These are the patient traders up here. And they're already closed too. They shut it down right here. So now they're looking for two places.
Scoresby says tariffs are not
Looking for here.
With stack
And they're looking for like right in here somewhere, like in this area. You let them jump in first, not you. Yeah, it's the save and face move, right? You got to think in terms of like, you know, like, look, like the last time I was in the army.
Scoresby says current form of uncertainty is disconcerting for the economy.
Once that trigger was pulled, there's once that genie comes out of the box, it doesn't go back in.
On the American airbase in Qatar with Qatar officials and gave advance notice that attacks were coming to minimize casualties.
Yeah, you get like 4,000 U.S. civilian deaths. That was millions of people that we killed, like civilians and combatants in Afghanistan and Iraq. It was not nice. People are like, "Oh, we didn't win that war." I'm like, "Oh, we won. We didn't go." Shouldn't say this, but a lot of like the story has changed over the years. We didn't go to Iraq. We didn't go to Iraq nor Afghanistan for anything other than let's get some. Seriously, it evolved over time to something else, but you don't want to. I don't want to see that. I don't want to see like a civilian incident because if that happens, that's another couple million people
Crosby says,
gone
"Thus far,
in some way,
impacts
somehow.
are not as bad as feared."
And that they're aware of that. I think not that they care as much as like a Sunni would care, but like even their like death to Israel clock, I think was they blew that up yesterday or something, and their plan is like 2027 or 2028. Like you don't want anything to do with that shit. I don't want to see any of that stuff happen.
Ed Scorsese says, "Tariff impact
Yeah,
was
fuck in the middle.
by
Don't
lowered
be fucking around in the middle.
and exemptions."
Don't do it. Even though you want to, don't do it. SPY's about to squeeze these people out too. They're going to target right now is 596.73. 596.73. We're going to hit this one right here. Right there. We're gonna touch it.
And of course, he says less immediate pass through of tariffs relative
596.73. Yeah, right about there. Then we're gonna pull it back. And then we're gonna pull it back. $597.78.
Goolsby says that I am seeing some burdening sharing in tariff response.
78 right there. One minute's coming up right now.
Goolsby says it's unclear right now how tariffs will drive inflation.
You want to see that tick right there, that arrow. You want to see that for continuation. I had a really nice. I spoke about it on the brief or on the show earlier this morning, but I had a really nice write up this morning explaining how all of this is being hedged, and it included when we get these headlines in cash market. We're doing it today. What I had written.
Says, the surprise
I lost the brief this morning. I'm so mad.
Has jumped yet. Excuse me. The surprise so far is that inflation hasn't jumped yet on tariffs.
It will. It's going to show itself here in just a minute. I think we just got the tick. Just got the tick just now. Next target higher is going to be this next one right here.
Adding there hasn't been much inflation in the last 3 months.
597.55. These go yellow now. And two targets, 597.54, 597, or 597.55 and 597.78. If you heard me on the stream with when I had my thing up and I told you to fucking close them down here, when we hit that and I said close them, good job.
It says if tariff dirt in air clears, we should proceed with a cut.
We did get the high tick. We are looking to trade higher right now. 597.55, 597.78. Note that we are coming into a half hour, so you can see a pull down, and then the next this should be over here. Not that it's going to take that long, but it can. It's a little bit lower. It's like right there. You're getting out once we're up here in this red. Leave the rest of it to the FOMOers up here. Up anywhere up in here, start getting out of your longs. Watch that red box up there. There is one more high target after this red box here. But I would not be trading that. This is the intraday high from this morning.
Reports here about the details then of the attack. So, contra reporter on X, they say it appears that tonight's attack by Iran only targeted Al Udeid air base in Qatar, with all other reports of attacks in Bahrain, Iraq, Kuwait, and Saudi Arabia either the result of attacks from Iranian-backed militia groups or they're entirely false. The sirens in Bahrain and Kuwait appear to have just been precautionary.
According to 3 Iranian officials, Iran gave Qatar a warning before attacking. That's good to see. The IRGC says any repetition of evil will accelerate the collapse of the U.S. military establishment in West Asia, and its shameful escape from it will lead to the realization of the common aspiration of the Islamic nation and the free peoples of the world to eradicate Israel. Oh, God. Christ.
That's cool. Speech says
Right. They like to write a lot of shit. Fucking
without knowing if it'll happen.
Strongly worded letters.
Goolsby says, I don't see stagflation like in the 1970s.
The brief is up on the screen right now. There's the brief. Up 10:30, down. Check again at 12. We're squeezing up, still on downtrend.
Goolsby adds that there is no clear policy response to stagflation environment.
Intraday high tagged.
Just keep an eye on US stocks. S&P 500 up about 0.6%, Nasdaq up about 0.7%, and Dow up about 0.5%.
Hold on here. Oof. This is the first new intraday high since June 13th in 10 sessions. In the last iteration, we sold the prior day's high and then ram it tomorrow.
Risk that both Fed mandates worsen at the same time.
New intraday high. Have not had one since June 13th. It was followed with a sell into the bell and then a ramporama in the second day. Remember, we have bad news coming on Friday. There could be a moment where we squeeze higher to get liquidity. Today and tomorrow. I wonder if I'm going to get my opportunity to put a hedge in the market. So right here, this is SPX Gamma. Been looking for, so this is back on the 11th.
A reporter on X for Energy Intel.
I've been looking for like 1 day.
There's been no loss of oil supply.
We haven't had it yet. There's another attempt at it going on right now. Look at trend on SPX. It's way higher. We are breaking trend right now. This is Friday. This is Monday. And they bought the dip here. Last week's high was right here. There can be an argument made we're going up there. The only thing that I would say would be you'd probably want to see some kind of a back test. God, I wonder if we can get another chance at I mean, I want it up here. Like, I don't like this one right here. I would love to see a higher high. Boy can dream, but see if they roll this down. That's still a lot to come back to. There's a big boy down there too. It's the whole move right there. When was the last time we had a new intraday high? It had to be the 12th, I think. Did I say the 12th? No, it was the 13th.
Goolsby says that he notes budgets being squeezed at government statistical agencies.
No, I may get that wrong. Hold on. It's been a while.
Adding the government data could get noisier on budget cutbacks.
Down there. Up, down, up, or a new high. It was the day we took the money and ran.
Third.
SPY has a potential here. Not guaranteed yet, but has a potential to run for like 6050 or 6070 or even higher. It is possible. Not all in one move. This has already been done here. We're done with that one. There could be a massive run coming up for bad PCE Senate hearing doom bullshit. And PCE should come in hot, so it's possible. We go hop higher right now just to cover it into Friday. We're on R1 right now, too, and we've got big range expansion. 602.14, 604.80. I don't want to get you teased up just yet, but 607.50 up there. There is potential. Six zero five zero 6075
So this is just keeping on the Nasdaq 100 extending gains to 1%. So again, we did have comments from Fed Scoresby said earlier on that if the tariff dirt in the air clears, we should proceed with a cut. Didn't give an exact timing though, but that's the only comment that we have.
That's not why we're going up.
Also, Axios reporter on X saying Trump administration was aware of an advance of Iran's attack on Al Udeid airbase.
So that's the first intraday high. I guess so. We had a high of the day, right? And then a second intraday high on SPY. Last time we've seen that with no new, so I'm talking about like a low in the market. So we had the intraday low, right? The intraday high, and now the intraday low, and then a new high. We haven't seen that in, let me see. We're looking to squeeze tits off in it tomorrow. 6/10, June 10th. We're looking to squeeze into tomorrow's open and then sell it. We should get a back test.
Reports that Iran told Qatar that Iran was going to fire missiles to Doha, and then Qatar.
There's a fair probability of a
coming. Just to report what we're seeing.
Squeeze up into tomorrow.
Also, used officials to Al Jazeera says our forces have taken preemptive defensive measures in anticipation of any Iranian attack on our bases in the region.
You'd actually see a squeeze up into the bell or into 330, and then a drawdown, and then a squeeze up overnight. It's very rare seeing this. That's why you're always watching this shit here. That's why you're always watching for, like, does it poke its head up? Does it not? Does it fail? That means we're going higher. Probably not now. Probably going to pull back, squeeze up into the close, dump it from like 3:30 to 4:30, and then ram into tomorrow's open for the Senate hearings. Fairly good chance. Like, we're like 45% right now. That's a really high chance. If we do any kind of like check back that holds, it becomes like a 65% chance, and then if we run into 3:30. It's like a guaranteed. We get a gap up tomorrow. Not quite there yet, almost. We should run right. Theoretically, we should run right now higher until 3:30. And it's only 1:45 right now.
So senior regional
very rare here
says Iran informed the US via 2 diplomatic channels at hours ahead of attacks on Qatar.
Fucking plankton.
Iran also informed Doha. So again, Iran informed US via 2 diplomatic channels ahead of.
We're going to attack you.
Tehran
right here. X marks the spot at this time.
Regional source here.
And we're going to tell our people that we did this and did that. I like that. That's good. I like it. This one's now gone. This one's now gone. You can see now that we're climbing the wall of worry. Upside targets, end of day, 603, 602.15, 603.13. Believe it or not, we might get a new market high tomorrow's open. It's possible. It is very possible. Don't go crazy with that, though. It's probably just for liquidity on this bullshit with the Senate and the bullshit with PCE. Should I write that in there? I don't know what.
According to two White House officials who spoke with CNN, Trump is monitoring potential Iranian retaliation against multiple US bases in the region, in addition to Qatar, including Bahrain and Iraq, and possibly more locations. Again,
I don't think this is going sideways.
Who spoke to CNN.
Trust, this ain't going sideways. Here, I'll just show it to you here. See that right there? Whenever you see something like this, it's implying right now that we're gonna more than likely just crank this up one more time. Come back down to the close. Here, I'll just draw it out for you. What it should look like. When you see something like this, you're not like, oh, we're gonna crash right now. No, sir. There's 1500. There's 1530. I would expect more up. Hold on. There, then down there, and then higher.
Crude futures falling over $4 as Iran's retaliation focuses on regional US military bases.
That right there means something completely different. It's like there. And then tomorrow's open. The only good news, wait a minute, this Monday, where's Friday? Where's Tuesday? Tuesday, 9 a.m. Yep. It's still going to all come back down. It's all coming back, but it's something like that. Yep. 1600. There's a fucking bear trap in here. Now it'll still come down. But it's probably tied to like Tuesday, Wednesday, Thursday volatility. It has to be.
Fed Scoresby says
some kind of liquidity grab in here.
To growth in short run.
These are they're good for uppies, but there probably has to do with Jerome Powell and PCE. There's a 4-hour right there. That one's gone. That one's gone. There it is right here. No immediate rejection. Ripping faces off. All bullish.
According to Al Samaras,
very rare to see this price action in the middle of the day. Usually shows a at least a trend change for at least a day at minimum. big reversal there.
So oil falling 6% after Iran missile strikes on Qatar intercepted.
Be extremely careful. I want to show you guys something really quick. This be like, I want, like, you know, we talk about watching trend or watching inflection points. So this is the 11th, 10th right here. You're like watching these inflection points if they're violate, not violate doesn't really matter. It's do they show up to buy or not? And what I really want to show you the danger here is, do you see like you see this, like, you know, it's the same group of characters saying we're going to crash. We're going to crash, we're going to crash, and we reverse, right? Close those. So you're looking for, we said, hey, close this, right? And then look here to see if we continue to roll down. And we didn't, right? We're breaking higher right now. And there's a trap in here. You can see it. The real danger is, you don't know that we're going here, but, you know, there's some fucking danger here of, like, whenever you see these, like, if you're looking for inflection points in the process, and then you're hedging highs along the way, we haven't seen one. It's been declining. So we are set up for a squeeze. Normally you'd see at least, you know, like one more, you know, maybe one more on Friday, like ample opportunity to exit.
Two U.S. officials.
We haven't seen any of that.
Casualties reported after Iran.
We're kind of at that place right here where the market's showing its cards, and they're just unloading right now. So if that's the case, you know, a trade higher here, we should make this bigger so you can see it at home. So base case would be, you know, you get us up here, send us down. Right, market can absorb all that. Maybe some, you know, back up here again and some positive. Right, and then all of a sudden into Friday before you get the PCE. The one danger here is there's a lot upside there, isn't there? You know, I got some doom in there. We're up there. You get, you know, Jerome bullshit bought back up again. And they run this fucker right up into Friday, and then you get your PCE doom, and we're right back on trend again, you know? So you got to be careful of it. Just like breathe for a minute. Look where we are. And not only that, I want to show you this here really quick. So this is month end. I want you to see this month end over here. You see this month end? This is month end right here. Or not. Sorry, hold on. This is what I was talking about with VolWiz the other day, is like, you see this like reversal right here? The reversal. And then you get the month end bullshit down. Just seeing this right here. And, you know, like here's the 30th right here, right? You know, some kind of fucking stupidity like that. PCE down, down. And then that reversal is kind of big. Hold on here.
Fed Scoresby says that I'm a neutral on crypto, mostly focused on financial stability.
Tuesday, Wednesday, Thursday, Friday.
Saudi Arabia says
Hang on
Iran
here.
attack on Qatar cannot be justified. Also, report on X says, as per our latest images, traffic in Hormuz is unaffected. Also, US military official says no Iranian attack recorded at any US base other than Qatar.
So just a note here, I'm going to post for you. I posted it on FinTwit just now. That might have been the trap. Please, please, please tell me that was the trap. Yeah, I'm not hoping. I'm going to give it like a fair chance of it. They're likely going to run this up into like they'll run it up into our Senate hearing. They'll come down in the Senate hearing.
And they signed security.
It'll go back up again.
On defense.
It's possible it goes up straight up with a couple pullbacks on PCE, and it won't stop going up though until NFP. Just take that as a warning. That price action right there is a reversal in my eyes. It hasn't confirmed yet, but it's a reversal. It's a major reversal. If you're a bear, be careful. Please, please, I'm begging you to be careful. I'm begging you. Just be patient and wait.
That's cool to be said.
If I'm wrong, we'll know. You'll see it. We'll go down. But that was not the price action I was looking for the bears. That looked like a trap. That looked like a door closing on the wrong. I mean, you guys all closed down the low, so you're fine. But if you're looking to get short right now, don't. Not yet. I'm serious.
No interruption to Qatari energy shipments or production after attack on Udeid airbase.
You could like potentially get short on tomorrow's open. Like at 9:30, try to get short there, but don't do that shit right now. Don't try to take the short in the close. It's going to go down likely at 3:30. You could take a small short if you want.
It's
but I'm telling you, it's hella dangerous.
Reputational risk when examining banks.
That looked like a bull trap to me. Not bull, bear trap. That looked like the fucking market having to show its cards in cash markets. They like lifted up their skirt just then. Be hella fucking careful here. Yes, that's true. 100%. If you are a bear, please listen to me. I'm begging. You get one warning. That did not look good for you. that was not a good look. Like that really wasn't. I'm assuming it's for liquidity. It's assuming because we're in, we're in Opex or Opex, and dealers are like, yeah, we'll bring it up, we'll rip it up here, and then we'll get some fucking craziness from the fucking House and the Senate. We'll send it down. We'll get a little bit more like, Iran doom. We'll bring it back up again, and we'll run it up into PCE. We'll get a bad PCE print. We'll blast it down again. I'm warning you. That didn't look good. That looked like a fucking bear trap. They're not frequent. The last one I saw was like 10 sessions ago. It's been a while. That did not look good. It was a bad look. Please believe me. You guys know I watch this shit fucking 24 hours a day, right? Like, that was not a good look. You guys are going to get another chance to put a hedge on higher. It's going to be fucking epic. Can't wait. I've been waiting for this for like 10 sessions now, 12 sessions. Please. There are like, it's like, we'll talk right now about some of this stuff. So, like last week, I fucking took muscle relaxers. I've hurt my back. By the way, so muscle relaxers, I don't ever take those things. I took one, right? Then I took a second one in the middle of the day, and then on Friday, I'm like, God, I can see why people like these things. I was like, my wife was like, you want another one? I'm like, no. I'm like, it's bearable pain now. I'm like, but I can see how people fall in this hole of taking pills. No, I didn't drink or anything. I wore off by morning on Saturday, but it was fascinating. But anyways, when do your puts close? You might catch a dip of like 415 from like 313 to 415, but you might. They're gonna run this up they're gonna run it down again tomorrow for the Senate hearings, but they're gonna run this fucker up right at 9:30 tomorrow. Almost guaranteed. I sit here all day long to know this stuff if it happens. It looks like it's happening. You should see updates from people that you trust out there. They're going to tell you that same thing. I don't know how fast they'll tell you, but that was not a good look for bears. I'm telling you. They're going to fuck you up from here till 3:30. Like, you got violated, bros. That was not a good look. You could see what you should see, like 3 more down moments in the market. A down moment tomorrow, down moment on Wednesday, but a large Wednesday, but then a larger move higher for Thursday and Friday. It looks almost like the chicken scratch I drew. Let me show you what it would look like. It would look something like this. That was a pretty big fucking reversal right there. That was very rare. It would look something like... this is on a 4-hour basis, but let me put it on a 30-minute basis. Hold on. It would look something like something like this. Monday, Tuesday, Wednesday, Thursday, Friday. Something like this. 1, 2, 3, 4, 5 right here. Something like this. Now there'll be pullbacks in here, but it would open up on a high tomorrow. You'd sell this down, and this would actually be your biggest one right here. So this one right here would go, something like that. Just a warning to you right now, okay? Now this would be the impulse move right here. So this impulse could even take out that 602. Yep, right there. This impulse move right here would take out that prior high. So you wake up here, come back down, and then you'd knock out this one and this one. So this one would go right about here. Hold on here.
EC President von der Leyen, as well as Canada's PM Carney, currently speaking.
What's really wild is there are other ideas here that you would hit 6075. There's 610, right? I'm telling you guys, like, there is a move here. If you're a option seller, be extremely careful. There's another one up here. I don't even want to talk about this yet because just be extremely careful here. There's a liquidity grab going on. I'm not sure it's going to happen, but I mean, you could argue that Hold on here. Do I think 615? There's 610 right there. There is an argument, you know, for trading like there's an argument for trading 610, at least on SPY. It's there. I'd like to see that fail though. You know, I'll say it now without looking any further. Price target SPX failure of 610, 6100. SPY easily could trade 609 and a half. Be very careful of this liquidity grab up here. That's like this right here if you're watching down below. It's some kind of a, where's Friday?
So Trump on
Thursday close.
The sites that we hit in Iran were totally...
I'll leave this up for right now, but some kind of a failure up there. I'm gonna leave this here. Now that doesn't mean we can't do like, you know, up there, down here, get all that stuff up there, down there, you know, down there, that kind of stuff. But that was a big fucking trap right there. And the last time we did it, it was a mess. So just be careful. Now there's a sellers here at 6035. So, you know, you ramp it up into the close, you wake up tomorrow morning, they come back in, try to sell you down on Jerome Powell shit. But if that holds and you get some like Jerome Powell, yeah, bro, we're going to cut rates and all that kind of shit, this market start fucking moving. Be extremely careful here.
So EC President von der Leyen says the EU and Canada agree to maximize pressure on Russia. So we have got a live video of where they're speaking on the feed for those interested.
Be extremely careful. We haven't seen any other highs in this Opex, so if you're a bear, dude, you think I don't like you? I don't. I love you. Like, I really don't hate you. Be extremely careful.
So confirmation now from 2 U.S. officials that there were no U.S.
Price target, Thursday close, failure of 610.
UDI airbase with short and medium.
608. I don't give a fuck what happens.
U.S. energy.
That's 80 points higher.
Quite good about
right here.
Output.
Buy any dip tomorrow. Buy any dip on Monday, Tuesday, Wednesday, Thursday, Friday. Buy any dips tomorrow and on Thursday. Any pullbacks Tuesday, Thursday. And I don't know if you get the pullback on Thursday, but they should ramp you right up into like Friday open. God damn. What a fucking trap that was. Balls. Yeah, I'm telling. There was a trap here.
So again, keep in mind,
there was a fucking bear trap. It was glaring. The way that dip was bought, and then just this breakout right here. This is not bearish at all right now. This is very extremely bullish. If you're looking for a dip to buy today, 414 between 3:30 and 4:14, you might be able to jump on the train. but you'll have to sell the open tomorrow. That means it's spread. You should have another dip by tomorrow. Sometime in the middle of the afternoon, maybe 1:30 or something. That's why I fucking hate quarterly Opex. You're like tied into a range, then you think it's going to crash and it's not. Then you're on like a high and you're like, okay, we're going to trade the big range. Meanwhile, we've gone nowhere. Like everybody's like, yeah. You're just looking for these major highs and lows to get long or short. Not major, but like within that trend, within that like quarterly Opex bullshit. There's a trap down there. We hit it.
In the AI Factory initiative.
That was probably the best dip you could buy until Friday. But you're going to get another chance at it. You should get another chance. You should get another chance today and tomorrow. It's coming back. We'll come back to the hourly trigger. At least once, if not twice. Maybe the half-hour trigger.
Minister on X says security conditions are stable in the country.
God damn. Trap him and gap him, baby. Woo! Yeah, there's a trap. Bears are trapped. If you're fucking inputs, you didn't close down that low down there.
CNN, Trump doesn't want more military engagement in the Middle East.
Not right now. They're going to run it up your ass, I promise.
So CNN, they are citing a senior White House official on Trump's thinking, again saying Trump doesn't want more military engagement in the Middle East. US House Speaker Johnson said it is not an appropriate time for Congress to consider a war powers resolution. So according to a US official telling the wires, no Iranian missiles appear to have hit US air bases in Qatar.
Yeah, I told him at 12:30 to close him on the stream. I told him to close. I said it publicly. I said close them right when we hit down there in that weekly low. And then I told him not to buy puts again over there. I said to wait. Right here, I told him not to put puts on. We just blasted. We just took out like fucking a whole bunch of motherfuckers. Look for like 330 to start if you want to start selling a little bit.
So keep in mind, in 10 minutes' time now, at the bottom of the hour,
Still got another hour.
Comments from Feds Williams and Kugler, who host
Somewhere in here.
event at the SUNY Community College. No text expected, and no Q&A either. So at this Fed Listens event, Kugler...
Yeah, they can get a bang in. They can get a bang into like 4:15, 4:30.
For Kugler, no Q&A though. No live stream available.
I'm not disagreeing about that. I don't think they get in though till around that time. Somewhere in there. I think there's still one more fucking stupid squeeze. I'm starting to sound like a bear myself. Look at me. One more stupid squeeze. Some fraud pump. Fucking chase special. Look, they're going to pump it again. They're going to squeeze us one more time. That was a trap, I assure you. Or like it's looking, how about this? I'll say this. It's looking like a trap, smelling like a trap, walking like a trap. Not quacking yet, but it's gonna. I haven't looked at CL. I posted it on Discord too because I've got us going down. But you see that reversal? You heat it with any expectation. If you see that shit, bye-bye. Rip it up. Risk is now to the upside. God damn, look at that shit. And it's the way it happened, too. You got to see. So if you want something cool to look at, right? Let me show you guys something. So I'll show you guys when you guys are watching candles and stuff. You want you to see what this means. So like you see these past days, right? Like you come up, right? Boom, down, right? Come up, boom, down. Come up, boom, down, down. That didn't happen here, did it? Happened here was we had boom, down, and we are known buyers, right? So we come up here, and you see that difference right there? You got that new high. So what they're going to do is ramp your ass up here, bring it back down, and start to try to go higher with it. This is not bearish price action in any way, shape, or form. As a matter of fact, I'll show you some prior examples of that too. Right? Whenever you're like watching for stuff like here, up, down. Right? Hold on here. Another one, right? Grind it up, grind it up, grind it up. Now this one here is bad, right? Ooh. But it still resulted in an up move days later. See, it still got that up move. So you didn't get the massive down here, though, did you? In cash market. Make sense? You got it here in aftermarket. This is the last one that I've seen it happen on. This was on the 10th. New market high, down. New market high, down, but what? Closing a high again. Bullshit after hours action, but where do we wind up? Wham, top of the key. So this intraday action is probably closer to this right here. The only difference here would be we had a new low down here from cash market over here on Friday, but That would be the only thing I could say is that this low, this early morning low, is pretty fucking low. It was way down here, so not exactly that, but that point stands that even if we go down here, it's up here. Following day, following few days, the way is higher. So unless the only other thing that I could think of here would be, look at this. I know this looks kind of goofy here, but
at the bottom of the hour, Feds Williams and Fed Kugler
here, let's look at this.
Be hosting a Fed Listens event with Kugler giving welcoming remarks. For Fed Kugler, a text is expected. No Q&A is available.
You do have this down here. This hourly trigger still down here, so this is 1530. This is 1600. This is 1615 over here. So there could be an argument made that you see, where's I don't know where 3 o'clock is, but some kind of push up here. I think that's 3 o'clock, and then a down move over here. And, you getting this thing up here. So it's something like that right there. Something like that right there. You guys watching this in a higher frame, or still 1 minute frame, but you get the point. If you are a bear and you're caught in this, try to get out if you can at like 596, 597. When you open tomorrow too, we'll have another down move hopefully, but it still likely resolves to the upside. Not a good look for bears. Not what you want to be seeing. Or for like the doom bears, not what you want to be seeing. Right in here is where I'd be looking to buy.
Attack on the airbase in Qatar will impact the relationship building efforts between Gulf states and Iran.
Catch that. Hold on a second here. That buy right there. And there. Watch that little gray. Watch this one right here. Rid of that. Watch that white descending line right there. Like one more pump up into, there's 230. No, that's 330.
Into Politico, Senator Johnson to meet Trump at the White House today.
So like one more like pump-o-rama. And then the blast down into the close. Watch it close here. Well, I don't see the bear angle. I just see, I'm not saying, I see the bear trap just happened. This also says they're not done with this market. Well, it says a bunch of shit, but it says that we're still locked into quarterly Opex for now. It says they want liquidity for some bad news ahead.
So this meeting
says that if you didn't think there was going to be another opportunity to hedge, that yes, there is going to be one.
So Ron John,
very rare in an Opex we don't have a high at this point.
Says I highly doubt it.
Outside of the high on 605, it's very, very rare that you don't see one, at least one more, while in quarterly Opex or monthly Opex. It's very fucking rare.
We get the text release from Feds Kugler at this Fed Listens event.
And all of these inflection points have been respected too. Now, like if you're a bear, I showed you this in the decline, right? Like you need like a break below trend, rejection of trend. We're gonna unwind this shit. It's got to be like that. Yeah, you guys remember? You guys fucking forget like February, March, April.
According to a senior,
I was like, I'm gonna stand here and watch for this.
Retaliation in response to U.S.
And they're like, crap, it's not gonna happen, and it didn't happen. Like the same thing in reverse. You're like looking for any kind of like break of major trend.
Kugler does not
And the 21 EMA doesn't do it.
Policy
If
outlook.
anyone's asking, I see people out on Twitter and
event in
people talking about 200 MA and shit, and like that shit doesn't fly. That doesn't work. It's where traps are. It was not looking good for Bears. God damn it, Bears. Thought you were gonna have this one. Anakin. You were my Padawan.
NYMEX gasoline July futures settle at around $2.21 a gallon. Diesel July futures settle at around $2.36 a gallon. WTI NYMEX
you can do that, Green Vegas.
51 cents a barrel. Down.
Just know that it's short moves, man.
22%. Also, natural gas July futures settle at around $3.69. Saying a senior Iranian official says Iran has the necessary rationality to begin diplomacy after punishing the aggressor. So again, senior Iranian official says Iran has the necessary rationality to begin diplomacy after punishing the aggressor. They say if they seek negotiations, Israeli and US attacks must stop. So again, if they seek negotiations, Israeli and US attacks.
All right. Good job. Right on, Green Vegas. God damn it. If I was a bear, I'd be fucking pissed. I'd be like, God damn it. I would. I'd be like, fuckers. I'd be pretty angry right now. I would. If I was like a true bear, I'd be like, mother beep, 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 beep. Beep, 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 beep. You know, like the true bear? I know you're out there. What are you watching me right now? I'd be so angry right now. Like raging upset. You're right now, as this is happening, this price action is happening. You're like pushing off right now, doom. Like real doom, weeks. Like 2 weeks, 3 weeks. Like real doom. Like you want like, oh, we're gonna get 560, bro. Maybe weeks away. Like, I guarantee you tonight that every single person that writes you a brief out there is gonna come out and be like, that was a pretty bad trap right there. Shit. That was not what a doomer wanted to see. That's not. That was worse. You ready for this? So if you thought 500 points down over the weekend was bad, that was good. If you like, seeing this is way worse than that. Like this is way worse. Way worse. This is bad for bears. It's like legit. I'll be right back with you guys. I'm gonna run these motherfuckers up. God damn it. I don't think we're voting on the spending bill this week. For real. I'm serious though. And I'll be right back with you guys.
According to a statement, Oman Air temporarily suspends flights to and from Manama and Dubai, Kuwait. Yves von der Leyen, when asked about US tariff discussions, says sovereign decision making of the EU is untouchable. So according to Fox News, US military is involved in intercepting Iranian missiles. So again, US military involved in intercepting Iranian missiles, as Fox News reporter citing senior US officials on interception. according to CNN, Witkoff has been in touch with Iranians since US strikes. So CNN reporter posts on X about Witkoff citing sources familiar. Just seeing reports here on X that Iran's Parliament's National Security Commission approves the bill on suspension of the cooperation with the IEA. Excuse me, with the IAEA. US House Speaker says this is not the time to consider Trump's war powers. So Johnson says, I don't think this is an appropriate time for a war powers resolution. I don't think it's necessary. Brent crude futures settle at $71.48 a barrel, down $5.53 or 7.18%. So Al Arabiya is saying that Britain says additional fighter jets have arrived in the Middle East. So it's also add that the British Minister of State Army, being cited by Al Arabiya, says we do not rule out sending more military capabilities if required.
Oh God, Spoos, what are you doing? Oh no, God. Oh. Oh. Oh God.
Just keeping on the S&P 500, just seeing a little bit of movement towards the upside.
Oh.
The extra move that we see towards the upside. We'll keep you informed as soon as we can.
Oh no. No, don't do it. Don't do it. You already gave him a chance to get out. You did. Don't do it. Don't do it. You know you're gonna do it. Doing right. Oh God, here we go. Oh no. Oh no. You know that's Panic at the Cellar Disco, right? Oh God. Oh God. Oh no. Oh no, that's terrible. All right, so like we'll try around like 3:30 or so up here. We'll take another shot at it over there.
Hopefully first vote Thursday, and says he's moving.
Oh no, oh no, God, no. Chase, where are you? You okay, bro? Oh God. Oh Lord, help me, Lord Jesus. Oh, help me. Boom, 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 boom. My shoe. My shoe. Oh, it's gonna be a mess. I can already see it. It's gonna be a hot mess tonight. We're in the oh God. Oh, this is exerting all the behaviors you don't want to see as a seller. This is nothing you want to see as a seller. This is all behavior of a reversal, major reversal for now. Oh God. Oh God. And then you're gonna see people on FinTwit. Oh man, it's gonna be a hot mess. It's gonna be messy out there. A lot of consoling going on. They rub their backs and shit. Oh, that is terrible. You know, a lot of anger out there right now. Yeah, there's gotta be like, wait a minute. What's the suicide hotline? You'll post this on FinTwit. This is not what a seller wants to see. None of this. I guarantee some theta people out there too that are at least like, oh shit. What are we gonna fail above? We're gonna fail 6050, 6075. You know, big questions, right? Like, what do you end up failing up here? And then there's a flip side to this too, which is, you know, we always come back down too, right? So the higher we go, yeah, if we go up here, grab some liquidity, and then start heading down into month end. Now here's the if you're still talking about, some kind of a failure. This is the 7th.
Westminster says we reject forced peace.
Just look at, we can simplify this. I mean, the only real question is, or the bigger question is, so this is Thursday. The bigger question is, are we still getting down there? I'm assuming that this has to do with, PCE, Senate hearings, and then, of course, NFP. You got NFP in here. You got PCE in here. You got a lot of reasons for the market to go down. So, look at it from this perspective that, so this is us exiting, right? We have not had a single new high. Normally we get at least one. You'll get like one up here and then maybe one right here. You kind of like stay range bound. And they kind of run you in. If that makes any sense. And then you get some chances. You get like, Opex or expiration or Opex, whatever comes first. You get, Opex over expiration, and then you get one more in here on the 30th. But I'm assuming that because my assumption here is that to stay in this range here, if we're staying in this range, or even 5905, even if this is it, I'm assuming there's bad news coming is my point. There's got to be some kind of bad news so that all right, I'm assuming that people want to see, this down here, just blood it all down, but that's not normally what happens. Normally, and we're on an uptrend, right? So you kind of have to lose this. And this triangle's holding. Like, this triangle right here is holding so far. Like, I want you to watch this really quick. This is what I was doing on Friday. You guys are like, yeah, this guy's all fucked up on pills, which I really wasn't fucked up. I mean, I was kind of fucked up, but not where I was not knowing what I'm doing. Like, if that holds, and they run us up for this, and then we're down there and we're up and gone. I mean, you can see it right there, right? If you're not able to get below that, that's not a good look for bears. And they're already buying this, they're buying this with CFDs on weekends. They're buying it in cash markets. They're buying it in fucking futures. That doesn't show up here in SPX, but it shows up on ES and it shows up on weekend Dow. And they're just adding at a better price than we are. And there's probably an up move. I'm assuming there's bad data coming out in here somewhere. And what that does, it kind of it helps you fade all this. You're still in line. And not only that, you know what else it's telling you? The other really fucked up part would be is if we went down here and we don't get our 60s down here, we literally stay on. That's why I hate I don't hate Opex, but there's so much fucking bullshitting going on in here. It's easier to see sellers. I don't know if you know this, but it's easier to see major selling on highs. It's brutal to watch buyers. They can hide buying. Banks can hide buying way easier than selling. Selling is pretty clear. You can see major volume, but you can't see it when we're in after hours, fucking dark markets, none of that shit. Over a weekend, buying on lows down here, and you know, like then you pump us up for some shit news, and look at this. Now you have an area for pricing in fucking. You know, now you can price in, you know, war doom. That's a 2% move. I think we did 6% on when we invaded Iraq, Gulf War One. It was a 6% move. We're not invading Iraq right now. You know, like 2%'s a big fucking move. You know, 2% from down here is not a big move. You know, like if we were to like, you know, if we're like losing all of this and then we're down here, but you know, like doing what they want you to do. I mean, like fulfilling the hedge for, you know, you want to be fulfilling that the war hedge on a low, or that's what a lot of people want, right? Everybody wants like that fucking move. You know, they want, you know, down here, down here, down here. You start doing that move up here, it becomes this. And you might catch a wick. You know, whoop. And they were looking for bloodbath, wick. You know, this like takes all your expectations out the door. That'll piss some people off. Now, what I would say to you is what I've always been saying to you, which is, you know, this is the mantra. Like, I'm going to be serious here. Like, the mantra was and is take the money at 605 and be looking for opportunities to put a hedge on. And at the same time, just monitor, you know, what are the inflection points telling you? We're still not out of it. And if you catch that chance up here anywhere, like you had a chance on, I didn't put a hedge on up here. I was too fucking busy with the stream to be doing this shit. But, you know, I'm not going to be too busy this time. So if you fucking rocket us, you know, up here, anywhere in here, that's hedge time. Now, there's a couple ways you can express that. And I'm not talking about like UUP or QQQ putback spreads. I'm talking about like something for, you know, capture out in fall. And if it can print early, I've got a hedge on right now for some July doom, but I want that kind of, you know, I want something like that right there and catch a print way over here in September, October. You know, I don't have that on right now. I've got this on. As a matter of fact, this was the high, I believe, on Friday, and the low. Put a call spread on and a call spread for market up. And then I put a doom trade on with UUP. But that's only if we go down here. That would be dollar up, price down. And that's only out to the 18th. So that trade is for right here.
US military official to Al Jazeera says we'll continue to take all necessary measures to protect our forces, partners, and allies in the region.
So UUP calls were, I bought these here, I think. No, sorry, here. Excuse me. Got them on a high, which was UUP down. And, you know, you like this kind of stuff right here, and then this kind of stuff right here. If I can catch that print over there before the 18th. Anything in here. Any kind of dollar up, I win, I think. So That's not good right now. This is a bear trap. Or this is a bear trap. Even if we pull back, even if we pull down the, overnight here, some kind of a bear trap. It's showing itself like a bad habit. Look to begin selling around 330 to 415. You could catch a low at 415. If you're in cash market, I can't promise you that you're going to see more low than 597, 596 if you even see it that low. And you've got the hourly trigger coming up right now. Hourly trigger's heading that way right now, so maybe futures. You might get more down in futures. And we just got a new high back here too. You see that? High right here, high right here. If you're a bear, try to get out as best you can. If you can't, just take the counter trade. What are you guys doing? I missed all that. Let's do a
And further from US military officials to Al Jazeera, says that the Pentagon is providing options to Trump if he decides to respond to Iranian attacks.
So let's like do a quick like well, let's do like a quick like here's what I want to say to you guys. So we're in Opex. And I say this all the time to people. We're in QuapX. It's hard to get a read when you're in QuapX of where we're headed. That's why I hate giving them during quarterly OPEXs. Used to back in the day, I would like exit the market and I would stop streaming for like 2 weeks and I would take a break. The reason that I did that was because in this time period, you get false readings. You get banks and traders, and they lie a lot. They're like looking for exits, and they're looking for closing trades, and they're looking to put trades on for the new quarter. And it's a process that takes a few weeks. And within that process, oftentimes you'll get sold OM or OM or AUM, or you'll get sold their book. And in reality, a lot of the bigger players don't do anything until the first week of July. And then while you're trying to like read everything, like when you're, I was going to explain this earlier, but I have a program that I get gamma off of, right? And I put it, in the morning I take the reading and I put it on a chart, on a spreadsheet, right? And depending upon when you take that data, now there are better math problems that can kind of attempt to clarify some of that information. But if you're doing net gamma, there are times of the day where it sucks to take a reading. Now, this is trying to simplify this for you, that means that there's a lot of reconciliation from dealers in these time periods. And so you can get a bad read on gamma, the wrong time of day. And like quarterly OPEX is like a macrocosm of that end of day or that morning. Volwiz touched on this last week. He did it very eloquently, what I had already tried to explain to you, which is there's so much going on that nobody really knows what's happening. And depending on when you take a reading or a low or a high or not this or not that, it's fake. It's like one big expiration and roll of positions that can give you false everything for like 2-3 weeks. And no one wants to tell you that, right? But that's the truth. So you got to be really fucking careful in any Opex period, and in particular any QUAPEX period, even more so. And the things and the things that happen around those periods externally. So if you got like a lot of like, yeah, everything's gonna be fucking awesome, or yeah, we're gonna be doom and gloom. We still get like tractor beamed into this thing.
Iran's Khomeini says we didn't aggress anyone, and we will not accept any aggression from anyone under any circumstances. This is on a post on X.
Like you get a squeeze up on some really good external news, and it comes right back down in an Opex period. You're like, bro, why didn't it go up anymore? You're like, because we're in fucking Opex, dude. You know what I mean? It's like you're gonna blast down. We have negative news right now, and then it's coming back and sucked back up every day. And then the window leaves. Bears know this too. Smart bear knows that, right? You get a window, and that window, once it's gone, if you don't have significant price to the downside, they're gonna rip this motherfucker pretty decently. So I don't know if that's disparagement of other people. I'm not trying to disparage other people. I'm just trying to tell you that the real truth is people have to sell you subs every month. And the truth being is that you really want to just be sitting back. And on an upward trend, you're hedging downward moves. On a downtrend, you're hedging to the upside for a breakout and unwind. Now, if you're in the reverse right now, let's say we're in the reverse, we're in a downtrend, you would close those upside hedges on trend. So in the inverse, on downside moves, you'd close those hedges on downside trend while you're in the middle of an Opex, QUAPEX period. And this doesn't look good right now. This looks like it wants to make a breakout attempt. It's not going to break out, but it's not good for the sellers looking for, that outside the range QUAPEX period, window of weakness, new lows, close the door, drag them down, bloodbath. This doesn't look good at the moment. And we'll revisit it again. I'm sure we roll back down. I'm going to tell you, we will roll back down. And I'll be sitting there, and if it doesn't look good, I'll sell you if you're a bull. That's not good. That's a bull trap or whatever. And I don't want you to think we're breaking out in a way right now either. Between now and Friday, and next week, we're going to sell down into month end. If we don't, it would be rare that we don't. So I still think we sell into like month end, or not month end, but like the day after, a couple days after that, stuff like that. We're looking for some liquidity right now. Now, can we break out in a way to the upside early? Yeah, but it would have to be like a new all-time high, and then like there'd be a whole bunch of other shit we have to do. So it's not a high probability at this point. So you can take the trade higher. I still think you should be looking for a hedge. If we get a new high or some kind of like failure of not all time, but our trend high, it's a good idea to be thinking about a hedge. Well, I see higher Friday, or not this Friday, next Friday, I think. I see like the day before NFP. I see 6075. I don't think that's that unreasonable. I even think a failure of 6100 is reasonable too. I think we're doing a liquidity grab right now for some bad news, and to keep us on trend into the roll. That shit's bearish. Like, if you guys don't know this, when we go into a quarterly expiry, you'll see like not every time, so don't hold me to this, but I'll tell you guys right now. When we go into the actual month end day, what happens is you get a rolling of hedges. Some of them are bearish. Most of them are just meant to keep volatility down. They're not like necessarily bearish. They're meant to keep price movement. It attempts to keep price movement from going bananas, up and down. Now, oftentimes on the month-end day, like the 30th, you get like the JPM collar trade, and that's bearish as a bet. It's not bear trade. It's not technically a bear trade, but usually in an uptrend, we put those on. It results in a down market 2 or 3 sessions afterwards, but not the day of. The day of, these institutions will slam like a bazillion fucking 0-day calls while they're placing the bearish bet. So what it does is it does not disrupt the markets for that placement of a trade in cash market. So you might see like brief weakness in the morning, but then all those 0-day calls as they lose their potence, right, will ramp into the bell. You'll see like a huge upside move into the last day of the month or quarter, in this case. And then we sell that next day. So like this year, or this quarter, even if we were going to see some like real selling, it may not be until the day after Opex, which is a short week. And we also get data on that day. So like start looking at like on what do we got here? On the 3rd, hold on here. So like on Tuesday, we get ISM manufacturing and jolts. I bet you those come in hot if we're on a high. If we're on a high into like last day of the quarter, that jolt shit is gonna be fucking bearish. We're gonna blast down on that shit. And they'll be claiming it's because of jolts, but it's not. It's because of the bearish bet that was placed for the next quarter. Seriously. You'll be like, oh God, jolts came in hot, end of the world. You're gonna see people do write-ups and all that kind of shit. And you'll be like, these people are out of their fucking mind. They know what the fuck they're talking about. Now, sometimes jolt data is bad, over months and months and months. Then you get an amplified downside move, maybe. But right now, where the data is, it's not the data. It's definitely the hedge. So here we go. We're back to squeezing, back to new highs. Let's see if they can start selling 330 here. Try to cool this shit down into the close a little bit before super ramp. Expect a gap up. It might not happen, but expect a gap up on the overnight to sell on Senate Doom tomorrow. Oh, man. I went on Twitter and told him, I don't hate bears. Don't ever say I'm a fucking bear hater. Bears like saying that shit. He's just a permabull. Fuck you. Like, you're not listening carefully. I want you to look at at home, take a chart and look at some key things. Okay? Just snap a vertical line. Be like, I want you to think about data on 3 different time frames: a year, 6 months, and 3 months. And then I want you to think about monthly. And I want you to look at all this data on a very big chart, like 10 years. I kid you not, like 10 years. And then I want you to think about where's price heading into a report. So if the data is not so bad over time and you get a hot read, it's going to be a knee-jerk reaction if it is bad. The other thing you think about is when you're heading into these things is if we head into NFP and a high, we're going to sell it. If we get into a low on an NFP, we're going to buy it. You know what I mean? Generally speaking. Sometimes if you're heading into NFP on a low and data is really bad cumulatively over time, a period of time, yeah, we can staircase down. But right now the data is not that bad. So, and if you know that, you know that. A lot of the shit that I read and watch, I'm like, these fuckers are lying. They're either lying, stupid, or they're selling their book. It's one of those fucking 3. I don't fucking know which one it is they're selling. Is it lying? Yeah, lying to sell newspapers, lying to sell book. Dumb as fuck. But it ain't. Something's wrong. It can't be too many more than that. And they cherry pick. That's when I know they're fucking lying. I'm like, they're cherry picking right now. I just looked at a chart yesterday. I'm not going to post it, but I looked at a chart yesterday from a guy, and I was looking at it, and I'm like, yeah, that looks bad. And then I'm like looking closer at it. I'm like, that motherfucker. He showed that shit on a year chart. So, but it showed the last 3 years. It didn't show the last like 8 years or 5 years. And I'm like, he's fucking lying too. That motherfucker took that chart over to the right to not show you. That means that guy knew. I was like, God damn it. They're selling newspapers again. I'm like, fuckers. God damn. And we're trading on that shit. Like, as a retailer, we trade on that shit. And I'm like, these fuck trying to fuck a retailer again. I'm like, God damn. And no one ever looks. And if you think about it, nobody ever looks. Do they? They don't fucking look. Like, people are getting their news from like 140 characters on X. They're getting like fucked up news on Reddit, fucked up news on Truth Social, fucked up news on BlueSky. And it's horrible to see. AI, asking AI for questions. AI is fucking no. Every time I ask AI a question, I'm like, that shit is bullshit. Like, that is fucking bullshit. Wait a minute. That's right. Yeah, that's right. Wait a minute. Uh-oh, now it's bullshit. Now it's just pure lies. Like, it starts okay and then, or it's like topical, like bullshit news. It's just like fodder, filler. It's like garbage. So, yeah, it's not that it doesn't have a point, but it's not something that you should be using. It's kind of like Wikipedia back in the day. Even Wikipedia today. Like they got like the Christian, not Christian scientists, like the
Smith says more pipelines to.
I watched a video that showed that
that need to work together on oil.
I watched a fucking video on YouTube once where they showed that parts of Wikipedia have been hijacked by special interest groups, and they're like the only editors allowed now in these certain parts, so you get a lot of quack shit on Wikipedia today. And I think the guy from one of the big tech blogs, he was like, you can't believe how topical the internet is, and that AI has no fucking access to so much shit. Like the real true like bucket of information, it's like that big, and AI touches like that much of it. And AI has got no fucking serendipity, zero serendipity. And so you're like repetitive regurgitation, faking it and lying and making up shit, and no serendipity. Like, none of these models have serendipity. They have zero serendipity. And like, you can't beat that with a human. You guys know what serendipity is, right? I've said this in the show before. Kind of like when you it's like AI isn't everywhere. Like, you walk out in the woods and you see or experience something, that's something new to you. Okay? Now, serendipity is when you go somewhere where there's something that hasn't been inputted. And a famous one would be a library. You go to a library and you go there to research a paper on tomatoes. And that library doesn't have any books on tomatoes. But the librarian walks you down through the halls of books, and he's walking you through. He's like, I don't have a lot of books on this, but we can go take a look. But you know what's fascinating is I once always thought about the color of red, and it reminds me of tomatoes, in this other section that we have about red thingamabobs. And the researcher is like, oh, God, there's nothing over here. You were right all along. But you know what you just said to me piqued my interest, and I was thinking about it. Can you take me over to that section over there? And so all of a sudden, the researcher is in this new section thinking about tomatoes and this new thingamabob that's red, and it reminds the other guy of tomatoes. And that's how you get serendipity. And within that serendipity, some of that information is not in, AI or the repository of topical internet information. And until that shit happens, no shit, cool. He's probably listening right now. What did he say about me? Is that terrible? Oh, God, what did he say about me? Do they know who I am? Oh, God. It's so creepy. Wow. That's bizarre. Okay. That's creepy. He's going to get mad at me now. Oh, man. That's so fucking bizarre. That is so fucking bizarre. That is super bizarre. No talk of going potty. Catching a new high here into 330. Oh God! And you know where this goes? Oof. R2 is 602.13. I don't think we get this. I think we just putt along. We start fading the close, and you're gonna get a bigger buy after the bell here. I think this is where I think this is where the trap is for call buyers. Right in here somewhere. That's great. That's some crazy ChatGPT shit right there. Yeah, they don't talk about the feet though. Oh, potty breaks? What? Oh my God, that's terrible. He does know about the potty breaks. Like, doggone it was like, you ever notice when Jim James starts going on a tangent, it's because the market's not going anywhere? It's like he has to fill up some time. I got a plethora of information. I mean, if you think about it, if you were going to steal some shit, like how many people stream fucking 8 hours a day and blab for 5 days a week year round? There aren't that many. Like, I mean, blabbing like blah, 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 blah. If you wanted a human to fucking track. God, fuck me. Blah, 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 blah. How many people are actually talking for 8 hours a day? I don't know that many. Let's try this one right here now. Come on, just let him out, guy. Oh, I don't know where that was. Yeah, I would. You get all kinds of different emotions out of me and reactions and see what we got here. Just see this here. Just check around here, guys. Jesus Christ. Look at that B2 fucking bomber, dude. My God, look at that stupid thing. That thing is not fucking around. Tell you what, the U.S. is not fucking around. Not the U.S., but our military does not fuck around. I don't think there is a near pair. I think China could be a near pair. The only problem that I have with China right now being a near pair is
bases in Kuwait, Bahrain, and Dubai airports resume full operations following the pause.
Like, I think that China could be a near peer if you did some kind of guerrilla type tactic. Kind of like in Ukraine with, hey, if I can't beat you with an air force, I'll send drones to knock out planes. But like outside of that, like we're in like Gen 6 warfare right now. We don't talk about it publicly, but we are. Like the amount of money we spend on it too. It's bizarre. Like if you think about like some of you are probably ex-military out there. The amount of money that's been spent over decade, it's not just one decade advancement. There's a part to this that a lot of people don't talk about, which is we like war. The U.S. does. And the U.S. has spent a lot of money over decades. And more importantly, even more so in the past. I want to say it was World War I or World War II. We had a very high rate of, in World War II, we had a very high rate of soldiers that chose not to shoot accurately. So a lot of shooting, but not a lot of, I want to kill that person. And in particular, World War II. And just on the psychological, sociological, or social aspects and psycho aspects of warfare, the U.S. in particular spends a fuck ton of money on those aspects of warfare, education, and warfare. I know China does some of that stuff, but I mean it in terms of experience with warfare and relating that to in China's regime, it's hard. Like Russia has a problem with this too. Like Russia doesn't have a cadre. They inverse their cadre, I guess I should say. But like their officer, they have an officer corps, officer cadre in Russia. China has a lot of top down too. Like one guy at the top tells everybody what to do, and everybody follows. It stays in line. And there's a lot more flexibility and Western fighting techniques, where we've spent a lot of money on knowing how to kill people. It's horrible to say that, but it's not that China can't be that someday either. But that's a hard lesson to learn. It takes decades to learn that. And we've been trying to teach our own people how to do that actively, very expensively since 1945. Now, that's like 80 years of teaching that to soldiers, people, citizens, like Boy Scouts, Cub Scouts, sports, warfare is a crazy thing. I think China's smart. I mean, they're smarter than us, right? In general, not that they can't do that. Like having decades of that experience while doing it is very important, and that's where I think the U.S. still excels. And then just the size.
U.S. Embassy in Qatar lifts shelter-in-place order, and embassy will open on Tuesday.
Like influence, size. I don't think that it can't be defeated. I just think that it's going to be hard. It's not going to be like taking candy from a baby. No way. No way. And it was scary about that too is like when you see like I don't know for sure if we're like self-realizing a fourth or fifth turning or whatever the fuck it is, but sometimes you can like force those things to happen if too many people read about it or whatever. But even if it is, and even if we lost, it doesn't matter. It's going to be brutal. Like when you look at like England in particular, when it was brutal, right? England losing supremacy was not an overnight thing. And it was brutal as it happened. It wasn't that quick and easy. And they maintained that hegemony for a fair amount of time. And even then, you know, you had other hegemony before that with Rome and with Eastern European empires as well. And of course, we want it in one day, right? And it's like it's not going to happen that fast. It's not going to be given up that easily. I think a lot of people are afraid of, which rightfully so, afraid of, you know, we're in a world with nuclear weapons, and AI and robotics and drones. I was talking to a friend over the weekend, and I was like, I could remember back. I remember when they were doing stop loss in the army, and this was in 07, 08. And the biggest fear was stop loss and being a driver.
3 members of Iranian
that was
Navy
it.
killed in an Israeli strike on Bandar Abbas port.
I don't even know how you, if we go into a real shooting war, like I'm trying to think, like would I have ever joined if like in 2000, 2001, 2002, and 3, and even 4 to some extent, you didn't know, like IEDs weren't prevalent. You were relative safety if you were in the military at that point. But like as the war dragged on and people were like, "Fuck that, I ain't joining." They started going towards people with no diploma, like 06, 07, 08. They were like taking anybody, any walking stiff that said yes, and they were taking anyone back that was prior service, and they were stop lossing shit tons of people to bridge the gap. And I always wonder, like now, I was talking to a friend over the weekend. I was like, do you think, like, if we went to another shooting war, the moment drones fly, would Americans want to join the military? Or would it be more like Russia, where you start drafting people? I've never seen a better or a more, I've never seen a more, or a time in history where I had to ask myself that question. I was like, if I knew that there'd be drones, would I join the military? That's a hard one to answer. That's some scary ass shit. I ain't gonna lie. Drones are like, have you guys seen some of that stuff in Ukraine? I'm like, you know what the scariest part about that too isn't so much that you die from a drone, it's the PSD that you're gonna be left with. I think about like Ukrainian fighters and Russian fighters. I'm like, you know, like those guys are going to all be a lost generation. Any of the frontline soldiers, likely anyone's near a line where you see drones, there ain't no fucking way they're gonna be normal for the rest of their lives. They're fucked. So the day they die, you're gonna see like a generation, and whenever that war ends, you're gonna see like devastation across all of those men and women in their lives until they die. And not only that, those people will pass that on to their children too. There'll be some of that happens too. So I think about that shit. I'm like, man,
10 seconds.
I'm like, that's gonna fuck some people up. Even the survivors. There is no real survival. It reminds me of like World War I.
Market on close imbalance. S&P 500 buy side 69 million. Nasdaq 100 buy side 406 million.
That's the best they're giving you.
Buy side 61 million.
It's this that fuck you know. Oh God, here we go. Like World War I was like that. I had an uncle. I had an uncle in World War I. I had an uncle he was like the Spanish American War, a bunch of different fucking crazy shit. He wound up in an asylum. I had 2 uncles in asylums, many generations ago. But 2 uncles wound up in asylums fighting during the turn of the century. And I had one uncle. You ready for this? I had one uncle that fought for Germany in World War I. He was Irish from Ireland. He fought for Germany in World War One. I kid you not. And then he was pressed into service in World War II. I kid you not. And in World War II, he was captured by Germany. And he was fighting for England. And he was an Irish guy. And he was taken as a POW. And he made it through the war. And he came to live in the United States. And he would get shit-faced and give all my parents and grandparents, give them all money and change and shit. But he would like get shit-faced drunk and start marching and singing like German marching songs and stuff like that. And this guy didn't like Germany; he hated England. he hated England. He didn't believe in German beliefs or whatever. He's like, the first chance I get to fight English people. I kid you not, that was a real story. Oh man, I warned him, Binky. I thought we'd get a little pullback in here. We ain't seeing none of that. I got to close some spreads to close here. Yeah, it's not good. If you have family members that are going through that stuff, you got to get them in counseling. Get them out of the military counseling too. No VA. Get them away from the fucking VA and get them away from other veterans too. That's bullshit too. They need to go to civilian help. Sometimes you got to close the fucking door on that stuff. Like bury that shit as deep as you possibly can. There's like no getting away from that stuff. Like really isn't. You just like gonna bury it. You get a good counselor to tell you the same thing. You gotta start a whole new life, brand new. You're reborn again.
Trump says Iran has officially responded to our obliteration of their nuclear facilities with a very weak response. So Trump posting on Truth Social here. So full says Iran has officially responded to our obliteration of their nuclear facilities with a very weak response, which we expected and have very effectively countered. There have been 14 missiles fired, 13 were knocked down, and 1 was set free because it was headed into non-threatening direction. Also, just saying I'm pleased to report that no Americans were harmed and hardly any damage was done. So he also says, I want to thank Iran for giving us an early notice, which made it possible for no lives to be lost and nobody to be injured. Perhaps Iran can now proceed to peace and harmony in the region, and I will enthusiastically encourage Israel to do the same. Seeing a little bit more movement towards the downside now on WTI crude, as Trump says, perhaps Iran can now proceed to peace and harmony.
Peace and harmony. How does it feel like? How does it feel out there? Like, if you're a new trader, how does it feel knowing that there's a whole other side to war and peace in the stock market? Like, fuck me. man, that sucks. They're going to gap us up overnight. Just a heads up. They're doing a lot of the work right now, but just be aware. We're looking to sell tomorrow's open. Man, I thought they might give you a little bit of fucking out here, but I mean, just give them a fucking out, dude. They're not even going to do that. Cranking right now. Just in the just take a peek here, okay? We're going up to the top of SPX right now. So if you're looking for some kind of like gap up and then roll tomorrow, okay?
Seeing here stocks gained, stock gain.
This is SPX right now.
Up 1% and Nasdaq up 1%. So again, S&P 500 up 1%, Nasdaq 100 up.
SPX taking stops back and forth. Major reversal this afternoon. Rarely seen. We haven't seen one in 10 sessions, not since I think June 10th. Where we've seen morning high, morning low, morning high, and then an intraday reversal to catch a new high intraday. Very rare. Not very rare, just rare when you see them in an Opex. We haven't seen any yet. We've been questioning that the past 10 sessions. Why has there not been a new high? We're seeing one right now, so just be careful if you're a seller. Well, you're likely getting another opportunity to sell. Somewhere between today and tomorrow is a good place to start. Between the close today and tomorrow's open. Be wary of a gap up overnight. Take all your fucking puts. The sell is likely on tomorrow's bell. They might be here, but it's probably on tomorrow's open. Like you're going to see a quick gap up in the morning. If you want to take a put spread here, it might work. I don't think a put spread's out of the realm of possibility here, but we watch out for the gap up on tomorrow's open. Yep. ASTS, yeah, I'll look at it. I think you'll spend some time up here. I don't think it's a reach. You failed 50, which is good. ASTS, you failed 50. That's good. You held. That's even better. You should break up and trade 52.50 and then spend some time around 50 before you start making $100. ASTS. AST space mobile. It's bullish. But you're likely going to spend time around that $50. You need to hit like 52.50, then have a pullback. You probably get it to the 1st of July. I'm saying you'll get like 250 next day or two. You'll get a roll down, and then you'll start going higher again. If you're looking for places to buy the dip, it's $38, $38.57. Okay, just a quick update here for preliminary. Now, this morning you're supposed to get a thick brief that did mention this possibility. It was in the brief. Well, it was in the brief, like, why we still haven't seen one. You should still you should still be looking for these highs to come before you exit the last 2 weeks. We gave an update like the first 2 weeks of this period, the next 2 weeks, and what to look for. Now, a couple things we got to talk about here, which is just on this close. Let me go to trigger screen. You're still looking for. This is kind of liquidity grab to come back down into reality. And I want you to see this first one right here. Just see that right there. Okay, so you got this, right? This right here. And I want you to think about either in the pre-market or overnight hours, and then maybe the open tomorrow, selling this down. So get some range expansion here if you can see it. I wouldn't be a bad idea to be selling this, but at the same time, just be thinking about the open tomorrow. And, sorry about that. But just be thinking more about selling this, that open tomorrow. You'll see in the overnight, you'll see a little low, but I think you're going to get one more high, and then we're down. That was a big, big, big reversal. Look at that. Close your puts. Look for a reversal on the 4-hour bar right here. It was like this and like this. But no trade to the downside presented itself. Yeah, and then what did we do, right? Squeeze them right up and out and around.
It's time for peace.
Now squeezing them again. And hopefully we can get a down move in after hours, but I still think it goes higher. Let's look at this one right here. So, you got, something like up here, right? Then we're back down over here, right? And then we're looking at like, we got like Thursday, or excuse me, like Wednesday, Thursday bullshit. Then we come into PCE Friday, or Thursday, Thursday, and then you end up getting you get your Doom PCE shit down here. And Friday we get the close, and then we're back on trend again. Right? And then we're like heading up into the 30th. You get up into like the 30th, and then you get like a month end PCE. We can go all the way down there and still be okay. So just be aware of this reversal and kind of its implications before a roll down. Just be wary of it, okay? If you are a bear, you're coming into a place to get short again. So look at it from that perspective. Don't be like, oh, the bulls got this. We're going to get fucked. You're coming into a great place to be short. So I'll see all of you guys tomorrow at 9:30 in the morning. I'm going to be I've got a guy working on the background, trying to figure out what the fuck is wrong with my website. I think it has something to do with like, it's rebooting processes in the background when I'm doing this stuff. So it's like